Online students, are you all back? Am I audible to you all? Yeah, apologies for that. These are things not in control, like technical issues, power outage and all, so sorry about it. I'll just wait 30 seconds for all the online students. Can you join back? Are you all there in the class? Quickly, guys. Aarti, yes, yeah, perfect, perfect. Okay. So let's proceed. So for the online students, there was one example you missed out because of issue. I'll just repeat that part again. After 31st March, let's say there is Vodafone and Idea. Before the year, they were discussing whether to merge or not. After 31st March, they decided to merge. Question is, this adjustment will I do on 31st March financials or not? Will I do it, guys? Reason, even though discussions happened during the year, think of one thing. I will go back to 31st March. In the balance sheet, did any of my assets, liabilities relate to this deal? Did I make any adjustment, any provision, something is there? No. Is it giving additional evidence for something that relates here? No. Correct? Therefore, you will not adjust this. Therefore, we have events occurring after balance sheet date can be of two types. This part all of you clear. I know the flow is lost in the middle, but this part clear. Events occurring after balance sheet date from 31st March till date on which approved by competent authority. Non-adjusting events are new events relating to assets or liabilities on balance sheet date. Adjusting events, what are they? Events which give additional evidence of a condition or situation of assets or liabilities on balance sheet date. So that you will adjust. Adjusting means what I have to do? Adjust the corresponding assets or liabilities. Now, coming to non-adjusting events, I have some options. Don't disclose, ignore it. Disclose in audit report, disclose in financial statement, disclose in some other report, How many of you ignore it, leave it? Yes, non-adjusting, why should I disclose? I will leave it. Can I disclose an audit report? Only auditor has right to make changes there. Financial statements, of course, not. I will not adjust in my financial statements. Why? Already up, not required. Other report, which report? Both report, can I disclose there all the non-adjusting events? If I'm going to disclose all the non-adjusting events there, already both report runs into 40 to 50 pages. That itself people have no time to read. So I will disclose only important events. We will call them in accounts as material events. I will disclose in my both report. Now everybody follow, guys. One small question, those who know don't answer. Company is there. All of you know what's a guarantee company? Guarantee company, new students. Yes. What is guarantee company? 1 lakh shares into 10 each. Paid up value, fully paid up. Additionally, they will guarantee to pay how much? Let's say rupees 2 per share. How much money is receivable? 1 lakh into 2. 2 lakh is receivable as guarantee from the shareholder when at the time of company winding up. Can I show this in my balance sheet? Amount receivable from shareholders for winding up 2 lakhs. Why? Very simple. If I show this in my balance sheet, don't tell prudence, 100% I will receive. What is the assumption? We prepare financial statements, the assumption of going concern. This amount is receivable only if this principle is defeated, correct? Only if going concern is not there, I will disclose this in my financials. So if I disclose this, that means I don't have going concern, so I won't disclose. So important is you financials are prepared as per. But if a change happens which is so material, it's going to affect my, can I say adjusting, non-adjusting, next year adjust? Question if next year is there itself is doubt. So better make the adjustment now. So they are saying non-adjusting event will become an adjusting event when going concern is affected. Clear? Now That's all the standard is all about. Events occurring after balance sheet date can be favorable, unfavorable, between date of balance sheet date, date on which financial statements are approved by competent authority, non-adjusting or new events, adjusting which gives additional evidence for a condition or situation that existed on balance sheet date. Accounting treatment, adjust assets and liabilities. Accounting treatment, no adjustment. However, if it's going to affect the going concern, so that is later. However, if it's material, disclose in director's report. Non-adjusting will become adjusting, which is going to affect the going concern. Clear till here? Now quickly we'll go to questions, and you will get the material in few minutes. Yeah. So till Siddharth, I'll tell you later, Siddharth. We discussed 3-4 examples. In question, you will get example. Questions are going to be examples. Follow. Question number 1. How we will solve in question? You will solve, read the question. You will tell the answer. I will just look at you. Okay. So, last student, read the question, first one. Go through the question. First doubt you will have before the answer is, will these questions be enough for exam? Accounting standards, 13 accounting standards, whatever we are going to do, all the questions in your material is past exam, ICA study mat, RTP, MTP, other authors. So accounting standards, apart from what we do in class, don't have to touch anything outside. Only amalgamation consolidation you have to practice little more, because we can't do that many sums. Okay. So question number 1, go through guys. Siddharth, now this is one example for you. Go through the question whether it's adjusting or non-adjusting. There was a theft of how much? In Jan 21. Event happened or yet to happen? Okay. Which was detected only in May 21. They found out. That means in Jan it happened, but I didn't know. The accounts of the company was not yet approved by the board of directors of the company. Whether the cash can be adjusted for 31st March. What they are saying is, as on 31st March, this day, in my balance sheet, my cash was, let's say, 5 lakhs, some amount. I thought it was 5 lakhs. But later only in May I found out, or in 31st May, I will do cash count. Everywhere you will do cash count, stock count. When I did cash count, I found there was some difference. But I didn't know why difference came. Then I'll put where difference, we'll put favorite account. Suspense account, I'll put in my favorite account. Then in May I found out, not suspense account, cashier took money and went, take away from his salary. This adjustment, should I make this year or wait till next year and make? Why? Detecting the theft is giving me an additional evidence for a condition or a situation for an asset which existed on balance sheet date. Time travel, go back to 31st March, assume this happened this day, what you will do? Adjusting. Online following. Siddharth, now you understood example for adjusting event. Okay. Next, question number 2. Can I have online Sandra to read the question number 2? Sandra, are you there in the class? Yes, Sandra, read the question. Clear guys, understood the facts of the question. Very important, you need to read the question properly. Exam, half the mistakes is because you didn't read the question properly, not because you didn't know the answer. Earthquake destroyed major warehouse of ACO Limited on 20th May 2000, either 12 or 22 or 32. Why X is there? Year keeps changing. The accounting year of the company was 31st March 22. The accounts were approved on 30th of June. So our scope is 31st March to 30th of June. March to 30th June. When earthquake happened? 20 May. Is it within my scope of AS4? Perfect, perfect. Loss from earthquake estimated at 30 lakhs. State with reason whether the loss due to earthquake is an adjusting or non-adjusting event. First thing in exam you have to do is first identify whether it's in my scope. Yes. Second, it's an event of adjusting or non-adjusting. How many of you adjusting? How many of you non-adjusting? How many of you I don't know? My class I want participation. Even if you are watching from your house, just raise your hand even if I can't see you. I don't know. Both hands. Please participate. Again adjusting. Non-adjusting. I don't know. Nobody is there. No. If you follow here, this event happened during my scope. It's a new event, huh? Or old event. As on 31st March, was there any clue which say earthquake is going to come? We are talking about first is it adjusting or non-adjusting. As on 31st March, nothing is there. New earthquake happened on after 31st March, so new event relating to my assets and liabilities becomes a non-adjusting event. So non-adjusting event we will again do one more check. Is it material or not material? Material disclose in board of directors, not material, don't do anything, ignore. If it's so material, going to affect my going concern, non-adjusting event becomes. Here they are saying, is there clue anywhere in the question which says going concern is going to be affected? They are saying major varos, but the amount is what? Question, if this happened, will my business close down? Going concern means business will close down, there is no more foreseeable future. Here 30 lakhs major varos, I understand, but will the business close down? It will slow down, but is it going to close down? So will the going concern assumption fail? It's still going to continue. So here I will assume saying what? It is a material event but not a going concern affected event. Therefore material where I will disclose. So non-adjusting event, material, disclose in report of board of directors. Following up. Online live, all of you understood? All these are past exam questions. How to present, I will dictate one answer template for you. You will write down. Online, all of you understood? Huh? Okay. Next, question number 3. Muthu, read. Thirty seconds. You give me the answer. Time over for me to discuss. You guys, 30 seconds time. You have to tell me adjusting or non-adjusting. Whoever says adjusting, right hand up. Always for me, yes means right hand, no means left hand. I want the competitiveness pressure in the class. I need you to compete with each other. Nobody in exam, sir, he's my best friend, sir, how will I compete with him? ICA is going to tell, only one of you will pass. Who should pass, you decide. What you will tell? Best friend. Best friend or me? So I need competition in the class. Online live students, I'm trying to create that competitive environment for you. Pressure, pressure. So you need to participate in Zoom live. Everyone chat yes, adjusting, non-adjusting. How many of you adjusting? Question number 3. Everybody. What is this unanimous resolution? How many of you non-adjusting? Anybody? Anybody in my team non-adjusting? So the answer is adjusting event. Reason, already I had a doubt whether I will recover or not. Some provision I would have created. Now I am getting additional evidence for a situation that existed on balance sheet date. Therefore it becomes what? Adjusting event. Perfect. Next, question number 4. Question number 4. Online student, can I have Aarti to read question number 4? Aarti, are you there in the class? Yeah, quickly read question 4. Aarti, can't hear you, but you're on unmute. Yeah, good to go. Go ahead. 15 seconds time, adjusting right, non-adjusting left. Keep it up, keep it up. Hand will not pain, guys. All of you are young. Keep it up, straight up. Create the pressure for your friends. I need the pressure to be there. Exam is all about handling pressure and nothing else. Don't know means both the hands. Some are saying adjusting. Here everybody majority unanimous non-adjusting. Online I got some adjusting, some non-adjusting. Now, now follow guys. Correct. On the balance sheet date on 31st March, did my assets or liabilities have anything in relation to this? So even if I knew on 31st March time travel I am going to invest, as on balance sheet date, what? It is not affecting any of my items, therefore it becomes what? Negotiations just started during the year. There is no, it is not giving me additional evidence. This only is the main evidence. What is additional evidence? Already 100 lakhs invested during the year. Now I am investing another 20 lakhs. Additional evidence. Following up. All of you clear getting the correct answer? Next, question number 5. Yes. Same only. That's why I said answer is non-adjusting. Vodafone Idea case, what is the answer? Non-adjusting event. There it happened newly. Even if negotiations happened during the year, no material new event during the year. Main thing happened only after 31st March. Okay. Now question number 5. Kirti, read loudly.
A limited company closed its accounting year on 30th 6, 2011 and the accounts for that period were considered and approved by the board of directors on 20th August 2011. The company was engaged in laying pipeline for an oil company deep beneath the earth. While doing the boring on 1/9/2011, it had met a rocky surface for which it was estimated that there would be an extra cost to the tune of 80 lakhs. You are required to state with reasons how the event would be dealt with in the financial statements for the year ended 30/6/2011.
So take a minute time, go through some work, loss of 80 lakhs, adjusting, non-adjusting, what you have to do. 30 seconds time. Those who know the answer, raise. Others online can type your answer. Keep it up straight. If you're confident, keep it up, keep it up. I don't know means both. So others. Okay. How many of you adjusting event? Nobody. How many of you non-adjusting event? How many of you some other answer? Not in the scope of AS4. No, follow. Company closed its accounts when? 30th June in our question. Approved on? Event happened on 1st September. So approved on 20th August. Event happened on 1st September. AS4 events occurring from the date of till the date on which approved by. This event happened. Therefore, it is not a question of events or adjusting or non-adjusting. It is not covered by AS4. So if you write non-adjusting here, you will think you will get 4 marks, but 0. Is it something you didn't know? It's all about reading the question and identifying that dates. That's why I left the question to you to discuss. Clear? Some of you identified, some not. Deepika adjusting. No, it's not adjusting. It happened after 20th August itself. So no question of disclosing in both report also. AS4 does not cover. Then what should I do? How to disclose? What guidance we have? SA 560 talks about these events. After this day, until AGM, what has to be done? Material, SA 560 talks about that. Clear? Can I proceed, guys? Last 2 questions. Okay. Question number 6. Now, question 6. While preparing, read.
While preparing its final account for the year ended 31st March 2011, a company made a provision for bad debts at the rate of 5% of its total trade receivables. In the last week of February 2011, a
Take a minute time, go through, give me the answer. Others, last 5 seconds. Some hands should go up, right, left, or both the hands. You cannot sit idle. Online live, Siddharth says adjusting. Others can type. We are seeing question number 6 now. How many of you adjusting? Non-adjusting? I don't know. No. Very simple. Event 31st March still. Which day? Date on which it was approved. They have not given the date. But they are saying in the last week of Feb, a trade receivable for 2 lakhs suffered heavy losses due to an earthquake. The loss was not recovered by insurance policy in April 21. So I am assuming this is within my scope. Assuming within scope, the trade receivable became bankrupt. Can the company provide for full loss arising out of insolvency of trade receivable? Yes, giving me additional evidence. Adjusting event. Earthquake happened for a trade receivable. Customer got earthquake, not me. What is happening? I sold goods to my trade receivable. For him, he had an earthquake in Feb 21. So he might not pay, I had to wait now. Then in the month of April, he was declared insolvent because of the earthquake. So I am providing for provision. Last question, question number 7. Shashank, finish it.
During the year 2011-2012, Raj Limited was sued by a competitor for 15 lakhs for infringement of a trademark. Based on the advice of the company's legal counsel, Raj Limited provided for a sum of rupees 10 lakhs in its financial statements for the year ended 31st March 2012. On 18th May 2012, the court decided in favor of the party alleging infringement of the trademark and ordered Raj Limited to pay the aggrieved party a sum of 14 lakhs. The financial statements were prepared by the company's management on 30th April 2012 and approved by the board on 30th May 2012.
So 31st March, already on this day one case was pending for 15 lakhs. They provided already 10 lakhs provision was already made on balance sheet date. Prepared on 30th April, financial statements approved on 31st May. On 18th of May, verdict came asking us to pay. Question is adjusting or non-adjusting. But it's after 30th April, no. I don't care when it is prepared. When it is approved matters, therefore it becomes an adjusting event. With this, we are done with AS4. You guys choose one question of your choice. I'll dictate the answer for that. You can write down. Presentation, how to write an exam. 7, which one, guys? Yes, Siddharth. Yes, you have to write both the ways. It's not about you assuming a date. You have to tell if this is before date of approval, adjusting. After date of approval, non-adjusting. Communicate to the examiner, you know the concept, not that you know the assumption. Okay. Which one, guys? 4th, your wish. 4th, okay. So write down. Template is same for all the standards. So first, I'm just dictating 4th question. So question number 4, answer write down. As per AS4, events occurring after balance sheet date are those events. As per AS4, events occurring after balance sheet date are those events occurring after balance sheet date are those events both favorable and unfavorable. Events occurring after balance sheet date are those events, as per AS4, events occurring after balance sheet date are those events both favorable and unfavorable that occur between the date of that occur between the balance sheet date and the date on which financial statements are approved by the competent authority. Clear? Write down that. You are just copying the definition. Exam, nothing to copy. You have to write. You have to remember and write. Next paragraph or next point. Next point. We'll write 2 points below this. Events which give additional evidence. Events which give additional evidence for a condition of or situation of assets and liabilities on balance sheet date are known as adjusting events. Just copy down events which give additional evidence of a condition or situation of assets and liabilities on balance sheet date are known as adjusting events. Events which give additional evidence of a condition or situation of asset and liability on balance sheet date are known as adjusting events. Full stop. Next point. New events relating to assets and liabilities. New events relating to assets and liabilities on balance sheet date are known as non-adjusting events. New events occurring after 31st March relating to assets and liabilities are known as non-adjusting events. Clear, guys? This took away half page. Income expense will impact assets. No, any income expense will hit the reserves. It will hit your balance sheet. You tell me one expense which is P&L item which is not going to affect the balance sheet. Everything will affect. It's going to affect whatever you do. The profit only will come to reserves. No. Okay. Expense paid, cash will be reduced. Accrual, liability is created. Sales, either cash sales means cash comes in. Credit sales means debtors come in. Okay. So it's implied. Now next paragraph. First what we wrote down, we wrote the provision of AS4. Next paragraph. We already wrote what is adjusting and non-adjusting. Now you write down. We are going to combine facts and analysis. The company had invested 100 lakhs in April 2021. The company had invested 100 lakhs in April 2021, comma, the event has occurred after balance sheet date. Event had occurred after balance sheet date. Event had occurred after balance sheet date and before the date on which you write down. I'll tell you before the date on which financial statements are approved by the competent authority. Or here you can write down before the date on which financial statements are approved by the board of directors. Clear? Full stop or comma write down. Such an event or the investment of 100 lakhs, such an event or the investment of 100 lakhs is a new event occurring after the date of balance sheet. Is a new event, such an event or the event of investing 100 lakhs is a new event occurring after the date of balance sheet. Is a new event occurring after the date of balance sheet and it is not providing any additional evidence of a condition or situation that existed on balance sheet date. It is not providing any additional evidence of a condition or situation that existed on balance sheet date. Last line, the negotiations which just started during the year does not impact the assets and liabilities on balance sheet date. The negotiations which started during the year does not impact the assets and liabilities. The negotiations which started during the year does not impact the assets and liabilities as on balance sheet date. Clear, guys? So last does not impact the assets and liabilities on balance sheet date. Last line, one line gap, last conclusion. Hence the investment of 100 lakhs, hence the investment of 100 lakhs is an event as per AS4, is an event as per AS4 event as per AS4 and is an non-adjusting event, and is a non-adjusting event, it's a non-adjusting event, comma, however since the same is material, however since the same is correct, no material, no, however since the same is material, invested, no, 100 lakhs. However, since the same is material, the same has to be disclosed in the standard, uses the term report of the approving authority. Here, since company will write, same has to be disclosed in the board's report. Same has to be disclosed in the board's report, or you can write down same has to be disclosed in the report of the approving authority. In brackets, write down what? Board's report. Same has to be disclosed in the report of the approving authority. In brackets, write down board's report. That's all. How long is the answer? One side of one page, 4 marks or 5 marks. Did you write like this? No. What you wrote? Non-adjusting event. That's it. Over. So 4 out of 4 or 5 out of 5 you need to write in detail like this. Anything unnecessary we gave here? No. Basically, when somebody reads your answer, they don't have question paper. Will they know what the question is? Reading the answer what you wrote now, if question is not there, I'm giving it to a stranger or a new student. Read this. Come on, tell me what is the question. Can he tell? Will he be able to identify what the question is? This much you wrote. So like this if you read, will you know? So you should write in such a way that the kind of theory, case study based question, you law or this paper, that even if the question paper is not there, I should know what the question is. As simple as that. Understood? Yeah, you can add that also. You can add, it's an unfavorable event. Yes, that also you can add. So with this we are done with first standard. AS4 should have gotten over 1 hour back, but challenges and all of that, we are done. Now I'm giving you the option. Do you want to go for a quick lunch break only today and come back and start AS22, or start AS22, lunch at 1:30? Majority you guys choose, guys. Thumbs on you. Online students, continue or break? Okay, continue. Done. No more time, guys. Now AS22, write down, guys. Accounting for taxes on income. Accounting for taxes on income. Accounting for taxes on income. Follow, guys. This standard, the next 30 minutes will tell me or will tell you if you understood or not. If you can focus for the next 30 minutes with 100% efficiency, AS22 is in your pocket. It's over. AS22 is over. Only 30 minutes. Then after that, we'll only be solving sums. If you are not able to focus for the next 30 minutes, AS22, forget about it for your exam. So online students who are sleepy and all, get up, refresh yourself, get the energy back. Can we start, guys, loudly, all of you? Yes, sir. Perfect. Accounting for taxes on income. Very very difficult standard even for qualified CAs to understand, but logic is very easy. Understand the logic, it becomes easy. I will give you example. I want you all to write down the example along with me. First the example. From the example you will get the concept. As simple as that. Example number 1, very important guys. AS4 all of you already know. First 2 hours was light, but now I need the focus guys. First example, let's say there is a company which purchased an asset. Background. Before this, I want you to recollect some income tax concepts because we're talking about taxes. Just a few basic concepts. What is section 32? Depreciation of income tax. All you have to know is in depreciation tax rate is different from tax rate of accounts. What you will do in PGBP, from book profits you will add back depreciation as per books, reduce depreciation as per, that's all. What is 43B of Income Tax Act? Certain payments expense will be disallowed if you don't pay. For example, interest, I am passing accrual concept, but if I don't pay I will disallow. If TDS is not deducted I will disallow. On purchase if GST is not paid I will disallow. Those concepts you know, that's all, enough. That's all, okay. So asset is there. An asset is purchased for 100 lakhs, following up. This asset is a windmill. So assume rate of depreciation in books of accounts is 20% straight line method. In tax it is 100% year 1. Possibility is that. Why they are giving 100 lakhs 100% depreciation? You will think, sir, why sir income tax is giving so much percentage depreciation? That logic also you will see. It's not promoting, no concept of promotion and all. Follow. Next, profit before depreciation and tax, PBDT. Let me write it as 100 lakhs for year 1 and year 2. These are the facts. Clear up? Straightforward. Anything confusing here guys? Step by step. Next 15-20 minutes, focus carefully guys, very important. Year 1, year 2. I am preparing working note 1. I will give you time to copy also, but I want you to follow properly. Question you wrote down, correct? So, year 1 and year 2, profit before depreciation and tax. Year 1 is given in the question. Year 2 is online students. Every time I ask a question, they hear students repeat 100, 150. You also repeat in your house, not in your mind. Repeat loudly. PBDT. Next, working note 1, I am preparing income statement. Basic income statement. Okay. So less what? Depreciation. Year 1. 100% no. 100% of 100% or 20%? Books of accounts, not income tax. So 20 books of accounts, no. 20% SLM method. Purida sure. Year 2. 20 are different. SLM straight line method. 20%. Very good. Profit before tax. Both the years 80. Fantastic. Till here all of you understood. Now less. Tax. How much? Did I give you tax rate? Okay, we'll write down that also. Tax rate, keep it as 30%. 30% tax rate. How many of you 24? 24 here. Here also 24. 0 marks in exam. How will the tax be on book profit? Then why income tax subject can be removed from CA syllabus? So we will compute working note 2, computation of tax. PGBP sum we are going to do now, but a basic sum. Year 1, year 2. First you will start with books as per, profit as per books of accounts in tax Guys, do you remember income tax? Anybody writing only group 2 and not writing group 1? That is fine. Do you know income tax? Did you study? You studied? No. Okay. I didn't study income tax. Anybody is watching this class? Skip this standard. Otherwise, you will not come for the next class. Profit before tax as per 80. Correct. Huh? What I will do in PGBP? Some add back. Depreciation as per books. How much? 20 and 20. Less. Depreciation as per how much, guys? 100. Why 100? 100% of the asset here. 0 or 100? How many of you 100? What is the answer? 0. Why? Because first year already provided. This concept only I want you to know from income tax, nothing else. This all of you know. So my tax profits will be profit, book profits after making all the income tax adjustments as per PGBP comes to how much, guys? First year, because this is going to be reducing here 100. Next I will do tax rate. How much? 0. 30% of above here 30. Brilliant. 30. So I found my tax. All of you told 24. Now you understood why it's not 24. So it will be here as per my working note 2. The profit after tax 80, 50. Till here, have you all understood, guys? Online students, have you all understood? Can you confirm? Because from now only we are going to start with the concept. Online following till here. Perfect. Now I want your attention, guys. Common man, not a CA student, not in background of finance, will they invest in shares or no? No. How many of your relatives, friends, cousins who are not having commerce background, after seeing YouTube ads, started investing in shares? Come on, I'll invest in shares. Today I made 10,000. I made 20,000. Bitcoin. To IPL ads are coming. Coins, which this thing, all this. Now, if then he also wants to learn to invest. No. So YouTube videos he will see. Many people will tell how to invest, fundamental analysis, tips, all that they will do. So first thing, if anybody is investing, they will go look at the company's profit. If I'm giving you annual report, first thing what you will see, guys? Net profit. Like how first thing newspaper will go to sports page, straight shift to sports page for guys, others whatever the page. First thing guys, you look at the net profit of any company. So investor, I gave him net profit. He has no knowledge. He just says, hey, I want to invest in this company. First year profit was, second year profit is 50. He'll die a waste company. Profit reduced, not a company. I will tell him, hey, invest, it's a good company. Hey, how you cleared CA? Profit reduced. Then I will tell him, it is not because of company's bad performance. Profit is the same. Profit is the same, but because of income tax books, income tax provisions of providing 100% depreciation in year 1, profit is decreased in year 2. Otherwise, performance of the company is same. He'll tell, don't try to fool me. What is all this? Don't try to cheat me. He'll tell now. So can I explain to everybody? What users will think profit has declined. So we studied in school, first the accounts class teacher taught you, objective is to give a true and fair view. Is this true and fair view? 80 and 50. Because of income tax, I am doing this. So if I leave it as per 80, 50, is it giving a true and fair view? No, because investor will think there is a loss of profit, but in substance it's not true. So what I have to do? Add back 30 here, 80, 80. Correct? Can I do that? No. So this difference, first identify, is it because of company's performance or because of income tax provision? In our example, all the examples for this standard, difference is because of income tax provision. So this correction I have to do. So let me see what is happening. Let me see what is happening. I will write down year 1. Year 1. What is my depreciation? depreciation as per, let's say, books 20, depreciation as per income tax is 100, difference. That means because I provided higher depreciation in year 1, there is a savings for me in this year. Tax has been saved. I saved tax. Why Rishabh just told us? What did he tell? Because why government is giving us 100% benefit? Because I am investing in renewable energy. Benefit, don't pay tax this year. Advantage, tax need not be paid. So how much I paid this year tax? So government is very considerate for me. They are ensuring don't pay tax. But I will start looking at year 2. Here 30, depreciation, difference 20, year 3, year 4, year 5, as long as the asset is there, 5 years, 20, 20, 20, 0, 0, 0, total will be 20, 20, 20. Now what is happening, guys? Follow very carefully. This is the concept here. In this year, what is happening? Because my depreciation in income tax is higher, my profits in income tax is lower, income tax paid is less. Let's go to year 2. In year 2, what is happening? If you look at our statement, I added back, even though I had depreciation of 20, it was disallowed. How much was allowed? That means my profit, which should have been 80, is inflated to 100. So I am paying tax of 30. Extra, how much tax I am paying? 20 into 30%, 6 tax I am paying extra. All of you agreeing till here? Agreeing till here? No. I'll repeat again. Year 1, 80 was my profit. I added back 20, reduced 100. Okay. If I didn't do all of this, I would have paid tax on 80. But because of this adjustment, tax has become 0. What is the reason for this? Because of additional depreciation of 80 in this year, I am saving what? Tax liability. Correct? But if you see in year number 2, I should have had an expense of 20, should have had an expense of, follow again, 80 was my profit, I should have paid into 30%. 24 should have been my tax, if not for income tax. Income tax not there, all of you told me 24. But because of this stupid income tax provision, I have to add back how much? Reduce 0. I have to pay tax on 100 into 30%. I get how much? 30 as my tax, correct? So I am paying extra tax how much? This you understood. This is because of first year I gave you benefit, this year I am taking away your benefit. This 20 is the difference into 6. So I am paying higher 6 in year 2 because year 1, how much I didn't pay tax, sir? 80 I saved. That means tax to the extent of 80 I didn't pay. 80 into 30% I get. So 24 tax liability in year 1 is not a saving. I didn't pay this year, but I am paying when? Year 2. Again year 3. Again year 4. Again year 5. Understood? Last row able to follow. So year 1, 24, which I was thinking it's a tax saving, enjoying happily, slowly without my knowledge, they are collecting 6, 6, 6, 6. That means is it a tax saving for me? It is a liability of year 1. It's a liability of year 1, but not paid in. It is paid in future years. That term is called what? I am deferring my tax liability is being deferred from year 1, deferred to my subsequent years. Following, guys. Therefore, this 24 is deferred to future years. So this year I have to create a liability of. So 2 liability of this year is deferred to subsequent years. Why this benefit? Why? Okay, They are not giving me benefit. At least they are giving me benefit of not paying 24 this year. That way at least government is reasonable. Why they are saying? You already invested 100 lakhs in an asset. Already you paid so much money. This year you got married, so much money spent. Then you won't have money for spending for other things. You purchased new car this year, new iPhone. Will you again purchase new phone? You will start saving. So they are saying already I spent 100 lakhs. We are income tax department, we are not so cruel. Don't pay us this tax this year, pay us an installment later. So I will also be happy. That is the whole concept of giving what? 100% depreciation. You invested in a good asset this year, already you invested and paid money. So tax you pay later. Understood? So this 24 is deferred for future. So I'll create what? How much? If I'm creating liability, what to debit? P&L account. If I'm rent I'm creating liability. Rent account debit to rent payable. Rent account will go to my debit of P&L. So when I'm creating a liability, something has to be debited off. What I have to debit? P&L account debit 24. Understood? So this is when you create a deferred tax liability. So what I will do in year 1. Year 2, what is happening now? Now look at year 2. 6 which was supposed to be paid in year 1, for which I created liability. This year I am paying the liability. Am I paying the liability? Actually, am I paying with cash? See, this entry is only a book entry. Second year I am going to make this adjustment. So this is year 1. Year 2 I will reverse how much? To P&L 6. Now let us prepare the same income statement with this background. Year 1, year 2 quickly. How much is it? First the profit before depreciation and less 20. Then profit before tax 80. Minus tax we already did or we have to do now? Working note 2 we did know, guys. How much? 30. Till here I am just copying this. This statement I am copying. This one. This I am copying. Okay. If I leave it like this, you all saw profit was what? 80 and 50. Not good, no. So I am going to make this adjustment of deferred tax liability. Year 1 what entry I passed? P&L debit 2. Deferred tax liability how much? So I will reduce how much? 24. Correct? P&L debit. Year 2 what I am doing? DTL to P&L. So I am creating how much? Add back 6. I'll just uniformity. Yeah. Add back 6. Now I will write profit after tax. How much is coming here? How much is coming here? They both matching. How? Because of passing a book entry, investors who are seeing on YouTube will understand company profit is same for both the years. Therefore, this entry, you think he will see deferred tax, hey, what is this? He will leave it. You think he's going to ask question, what is it? So deferred tax asset or liability is a mere book entry. Remember, entire deferred tax, there is not going to be any outflow of cash. There is not going to be any inflow of cash. It is a mere book entry. For what purpose? Better presentation of financial statements. Understood? Now easy. This is example for deferred tax liability. You make a note wherever you have to make a note. Then I will proceed with one more example how it might create DTA or DTL. You only will tell me. So here what is happening in substance? If you see working note 1, accounting profits, look at this. Accounting profits are more than tax profits, correct? Accounting profits 80, here 0, here 50, 30. Keep that in the back of your mind because there is going to be a shortcut how to solve the sum fast in exam also. Shortcut is only technique to solve fast in exam, but that is not the way to go about in life. Okay. So wherever you have to copy, I'll give you 2 minutes time, all of you copy. Anybody has a doubt online, please ask me, I'll explain now while other students copy. Guys, I'm scribbling, but I'm hoping you're getting used to it. I have to scribble to create the feel. New students, first time attending, able to understand. Online, able to understand everybody. Perfect. Vijay Kumar, unmute பண்ணி போயிட்டீங்க என்னன்னு தெரியல. Aarti, yes. Okay. Now can I proceed, guys? Proceeding means for you to copy down working note 2. Nothing to copy. If you have not, if you know the concept, you will just start filling it. Basic sum. Then year 1, year 2, year 3. Anybody wants me, sir, show me this, show me that part of the screen. Let me know. Online students, sir, scroll up, scroll down, show this working note, all of that. Just roughly, if you copy enough, why? Today you will understand. 6 months later or 5 years later, if you want to, when you go qualify, I want to know what is deferred tax liability. See, come back and save this book. Come back and see the example. You will be able to correlate. Not joking. I'm not joking. Yes. Working note to tax computation. No? Yeah, here I both are shown. Quickly, guys, 2 minutes to copy. Then one more example for the other part. Then you can go for lunch break. Thankfully, I did it now because post lunch you'll all sleep. Post lunch we'll start doing sums in the standard. That's it. Standard over. All the deferred tax liability over. One example, deferred tax asset. And some near potra. Tax? हम अदला पापों अदला 2 minutes concept நீயே போட்டுருவ படிக்கலாம் பா. Yes, all this 24,666 is book entry. What will happen end of 4 years? Reverse 6, reverse 6, reverse 6, reverse 6. 24 will become 0. Correct? One of my favorite standards, I teach in the last, but crash course always I come in reverse. Difficult topics first. The ones what you will skip, no, that we will do first. Banking company will skip, that we will do first. NBFC will skip, that we will do first. Buyback and all later. Done copying, guys. Preferably going forward, that's why I said running notes. Write with me and focus. You have to develop that habit, very important. I'm not saying something new. I followed as a CA inter student for all subjects. That's why I suggest it's very helpful. My CA inter notes 10, 15, 10 years back notes I still refer for concepts and all, along with study matter, all of that. All your books you have to save and keep. Don't, after exam gets over, don't throw it. Textbooks you can throw it, at least your notebooks, at least few notebooks where you feel are important. Okay, can I proceed, guys, to next example? Done copying. Example number 2, completely brand new example. Online, are you all back, guys? Can I start? 10 students online. Yeah, 20 minutes, 20, 30 minutes more. Let's finish one more example. What this example will be? Deferred tax asset, obviously. If it keeps suspense also, you will know. So deferred tax asset, but focus on the logic. Okay. Nowadays, everybody is into startup. Startup. Last 2 years trend. What you're doing, I'm doing startup. So startup, somebody started. Let's say 2 people, A and B, started a startup enterprise with huge hopes. Obviously startup biggest problem is idea is there, workforce is there, money is not there. So they went to the bank and took one loan, term loan for 200 lakhs, nothing but 2 crores. We will see in lakhs. 200 lakhs loan was taken with an interest of 10% payable annually for 5 years. Normally every year you will repay interest and principal, but startup, if I ask him to repay principal first year, he's saying now only I'm generating money. So bank told, don't worry, 5 years you pay only interest, principals you repay after end of year 5, you repay the principal. Will the investors be happy? Like the founders, they were happy. So important in this point is principal is not repaid, only interest is repaid every year. Then year 1 interest not paid. Why? Startup no money, so they didn't pay interest. Year 2 startup picked up, they got the money. So year 2 interest paid for which year? And year 2 also have to pay, no? Both the years interest has been paid. Clear? Huh? That's all facts. Then third year they'll pay. Our example, second year. Okay. That bank will take care. For us, what? Accounting. Because of this, how it's going to impact my presentation only what is matters. Following up. General easy facts. Now let's go to our statement working note. 1. Income statement. Year 1, year 2. So I'll just repeat quickly. There's a company which took a loan of 200 lakhs. Interest is 10%. Payable every year for 5 years. Principal will be repaid end of year 5. Year 1 interest is not paid. Year 2, year 1 plus year 1 interest is paid. I gave you background for that. Income statement. Earnings before interest and tax. They didn't give, no. Okay, I'll write that also. Let me write down some more points. EBIT. How much will keep 100 lakhs? Same like previous sum. Tax rate, if I keep same, numbers will be same. So I'll keep it as 40%. There was 30, here 40%. You can change whatever numbers, guys. It's only the concept. Earnings before interest and tax. How much, guys? 10 now. Our assumption, same both the years. Our assumption for concept purpose. This is working note 1. Books of accounts. Income statement. Following up. Let's what I'll do next, guys. Very good, superb. I'm going to reduce my books of accounts. Interest not paid year 1. How much I'll write here? Okay. Question. I have to pay salary to employees. I did not pay. As on 31st March, will I pass entry or I will not pass entry? What entry? Salary account debit to salary payable. Interest has to be paid but not paid. So how much I will pass? What entry I will pass? Interest account debit to interest outstanding. Will I pass or no? Concept of accrual. Even though interest is not paid, I will. 20 has to come. Correct? First thing we learnt in school. Accrual concept. Year 2. 40 I paid 40 in year 2. No. 40. We are seeing debit to P&L. How much, guys? How many of you 40 year 2? How many of you 20? Year 2 will also be. Guys, why year 2 is 20? Accrual concept. I know you are paying year 2. What would have been the entry? First year is interest to interest payable. I am just doing roughly. This year 1. Year 2 will be first that year's interest I am paying interest to cash. But I am also paying this, no. So interest payable 20 to cash 20. Cash outflow is 40. But debit to P&L is only 20. Correct? புரியுதா உங்க ஃபேஸ் பார்த்தா எனக்கு தெரியல அப்படி புரியுதா sure okay. Next we will get earnings after tax. What will come, guys? Before tax. Yes, I know, just checking if you all know. Obviously I know this. Earnings before tax. What you will get? 80. Less. Into 80 into 40%. How much? So, how much? How much, guys? Who all wrote 32? Take a pen and strike it. Strike it. Same mistake. How can you repeat 2 times, guys? 1 time only. What in tax you have to do? Computation. Working note 2. Tax computation. Online students, those who repeated the same mistake, strike it. Don't repeat the mistake. Make 100 mistakes in class. Absolutely fine. But never repeat them. As simple as that. That's the principle for life also, no? One time you make mistake, it's fine. You should not repeat. Earnings, book profits. As per books of accounts, what do we have? 80 and 80. Add back. Interest as per books. How much? 20, 20. Brilliant. So 1, 2, 3. Next, less. Interest under section 43B of the Income Tax Act. How much, guys? Year 1. Year 1, how much, guys? Fill the numbers. How much, guys? Online students. 0 because this year I am disallowing your interest because you didn't pay. Whenever you pay, I will allow. Year 2. Year 2. What will come here, guys? I'll give 3 options. You choose 0, 20, 40, 60. How many of you 0? How many of you 20? How many of you 40? How many of you 60? Online also. Correct answer, but 0 marks. Correct answer is 40. But what will come here is 20. Can someone tell me why? Oh, 1 second. No, correct. Fine, leave it. Minus 40, minus 40. Next, minus 40. Yeah, 20 plus, what is 40? 20 of last year, year 1 plus 20 of year 2. Therefore, what you will get? This profit, book profit as per PGBP. I can call this PGBP. Yeah? PGBP income as per income tax. How much I am getting? 160. Brilliant. Tax at 40%. How much? Here 24. Very good. This I hope all of you understood. 40, 24. From here what you will do? Come back to working note 1, reference working note 2. What is it? 26 or 24? Okay. Earnings after tax. Again what happened? But good difference, no. Profit increased. So what investor will tell? A startup company is doing very well. I am going to invest money here. So first year profit is 40. Second year 56. Come on, let me put my savings here. Then next year again interest not paid. Profit will reduce. Again next year interest not paid. Profit will reduce more. 2 years disallowance. He'll ask what happened. I'll tell same profit every year. This is the profit. Then I'm telling him 43B disallowance because of this. Don't give excuse. You took my money, you're giving excuse. So again presentation is taking a hit because of only income tax. Until here operation income is same, income tax is leading to difference. I should make adjustment. So we will again go to see why the difference is coming. Why the difference is coming, we have to analyze. Year 1, year 2. Interest as per books of accounts, interest as per income tax records. Any order is fine. This is not a maths difference, just to see difference. Here it is 20. Books of accounts always accrual concept 20. Income tax first year 40. Difference will be 20. Same difference. We'll see what that is now. Now you stop writing, follow the concept. Concept, how we saw that deferred tax liability. Here we have to see concept. Follow guys. Income tax, because in year one expense was disallowed, my profit increased. Profit increased, correct? So I had to pay higher tax. How much higher tax? I would have paid tax on 80, but this income tax is making me pay tax on what they are saying. Their logic is for 43B has a logic. What is the logic there? You don't have money to pay interest, at least pay me tax. They are saying you don't have money to pay 20. 20 you don't have money, at least you pay me what? You pay me tax of percentage of what? 20 into 40 percentage. 8 rupees at least you pay. 20 you don't have money, at least pay me money first. So disallowed how much? 20. So how much additional tax I am paying? I should have paid 80 into, which comes to, but I am paying 100 into, which comes to 40. Additionally I paid how much? Because of this difference of, so into 8%, sorry, 40% you get 8. That means actually I don't have liability, but you are making me pay this year extra tax. Previously we saw you had the liability, I am allowing you to pay in the future years. This year here there is no liability to, I should have paid only on 80, but you are making me pay extra tax. It's like a prepaid tax. I am paying extra. Why? Now let's look at year 2. I should have paid on 80 into comes to 32, but I ended up paying on 60 into 40 percentage. So next year he's saying, hey, don't worry, you should have paid 32 in year 2, but you are paying only, so I'm giving you benefit next year. So the 20 into 40%, 8. So this year it's paid as, it's not advance tax, but you are paying more this year, but next year you will, when I will adjust, I will give you the benefit only in the year where you make the interest payment. Year 2 if you don't pay interest, I will again pay extra 8. Year 3 extra 8. Whichever year you are going to pay the full interest, that year you take the benefit. Understood? Able to follow till here? Online, are you all clear guys? Till here understood? So I have paid advance, I have paid prepaid. So it's an asset or liability for me. It's a asset. So whenever something is an asset, prepaid, I will create an asset. Therefore, it's called a deferred tax asset. It's an asset which this year, which I'm going to use in the next year. So I'm deferring my asset usage for next year. Deferred tax asset account, debit, how much? 2. P&L account, 8. This is which year entry? Second year. P&L account debit to DTA, how much? Understood? Correct. That they should ask income tax department only. So they are saying, what they are saying, okay, interest you don't have money to pay, at least pay my tax. Adha solrana, you pay, you borrow more money and pay me tax. I'm this book entry only, correct? But this is actual entry, no. Instead of 32 I'm paying 40. This 40 is outflow, no. He is asking, enga interest e kaas illa, 32 da tarnu. You are asking 40 from me. Why should I pay? Purida. This is book entry only. So again come back to my income statement. I will write again freshly because it will be confusing if you write there. Year 1, year 2. Earnings before interest tax. 100 less. Less, I'll do directly, less tax. Year 1. We did no working note. 40. If you leave it here, we have the difference. First year 40, second year was 56. Now I'll bring in deferred tax asset. Year 1 entry is crediting by 8. So I will 8 without brackets. Second year 8 with, now do the total. So now because of, even though 43B is there, my presentation has not taken a hit. Clear? This is creating a deferred tax asset. So in exam, every time, do you think you will have time for putting this difference? You have so much time. So there will be one shortcut. Shortcut how to do? What you have to do, shortcut is, which profit is correct? Always accounting profit, books of accounts profit is there, no, is wrong. Books of accounts profit is, which is correct? PGBP. This is shortcut to solve fast. Okay, PGBP is correct. So I have to move from accounts to tax profit. In our example, year 1, within the same year, you see, within the same year, what is the book profit? 100. Sorry, 1 second. Oh, book profit. Where is it? 80. Book profit is 80, correct? So, our example, book profit is 80. Tax profit is 100. PGBP, correct? Tax profit is 100. In exam, they will give you accounting profit, tax profit. They'll ask you to compute DTA detail. They'll give you this as a depreciation. Do you think you'll have time for preparing all these working notes? Why I taught you all this logic you should know. Exam, what you have to do? Sir, all this last 1 hour I have to understand the logic, sir. Leave it. Shortcut for you. Which is correct? Tax is correct. Which is wrong? So from accounts I have to go to tax. So my profit should increase or decrease? Increase. So to P&L account I have to increase. So if I am crediting P&L, that means 80 has to become debit what? But I will not debit for the amount of difference. Difference is how much? Into tax rate. 8. That's all. Shortcut. Will work for every sum. When we solve 1, 2 sums, we will solve in logic, conceptual understanding. 1, 2 sums we will solve in shortcut. Okay. Exam, what? This is 1 second. 1 second you will get the answer for any sum. Okay. Clear? So with this is the concept introduction to DTA, DTL. Can I do one sum and go for break so that you will get that flow? In the break, all of you collect off your material. It's already ready. By mistake, I sent you soft copy even AS for group 1. Just ignore those soft copy. Print is only for group. Questions on practice for AS 22. We have study mat questions, RTP, past, everything. Your favorite tax holiday question also we have. Okay. Now, question number 1. Online till now understood. Anybody did not understand these 2 working notes? Please let me know. Otherwise, difficult. Full stand will be difficult. So far understood? Yes, online live students, can I get confirmation from the 10 of you watching? Yes, perfect. Guys, I want you to be more interactive. Otherwise, you can watch recording itself. No, why you are watching online live? Keep interacting. Doubts, keep asking. If you are saying no doubts are coming, I am getting scared. Yes. Yeah, correct. Only for making presentation. So question number 1, you are going to solve with so much 1 hour explanation. I will read the question, small question. No. Rama will provide the following information. Depreciation as per accounting records 2 lakhs, tax records 5 lakhs, unamortized preliminary expense 30,000 or fine, okay, 30,000. There is adequate evidence of future tax profits. Meaning of this statement I'll explain later. How much deferred tax liability asset should be recognized? Tax rate 50%. I want the correct final answer, guys. 1,35,000, what is it? Deferred tax liability. Rishabh says 1,35,000 is the deferred tax liability. Others, give me your answers. I want you to participate. All of you give me your answers. Some will be wrong, some will be correct, absolutely fine. Don't know also, you tell you don't know. It's more than, it's absolutely fine. Making mistakes in class in front of your friends is not shameful. It's okay. You think they are going to tell outside, anything will happen if you make mistakes here? Nothing is going to happen. Objective is not to make mistake in the exam. So don't feel shy, don't feel scared to ask doubts in the class, don't feel scared to give your answers, even if it is wrong. Whatever you think you will write in exam, give me that answer. This is one answer I got from one student, others 2 lakhs of. Okay, correct, one answer DTA, 1,35,000 DTA, one answer. Next, I am only noting down the answers, I am not discussing. We will discuss. We'll see. Any other answer, guys? Now let's go one by one. Depreciation, first let me strike off depreciation, then we'll go to this. Okay. Depreciation as per accounting records is how much? 2 lakhs. Huh? As per tax records? For you to understand easily, I am just giving assumption. Assume profits are 10 lakhs before depreciation. It can be just assume for you to easily understand. Okay. So profits after tax, after all depreciation will be 5 lakhs. How much difference? 3 lakhs. First let me finish shortcut. For exam, what I should do? Which is correct? Which is wrong? Accounts is wrong. So from accounts I have to come down to tax. So if I have to reduce my profit by 3 lakhs. So debit what? Credit what? How much? 3 lakh into tax percentage. How much? 1 lakh deferred tax liability. Okay. Question is not over. This is shortcut, but I don't like shortcut. Concept, you should know the concept. What is the concept? Because of charging higher depreciation and income tax in year 1, tax would have been saved in year 1. I would have not paid tax that year. So that year higher depreciation, that year my book profits would have been low. You can saw no book profits are low. So that year tax paid would have been, if I put 30%, tax would have been paid lower, allowed in some other year. So deferred tax liability. That is the logic you should be able to connect. Puridappa? Sure appa. Deferred tax liability. This is one part of the sum. Second part, unamortized. So let's say books of accounts, tax. Let me write the same 10 lakhs. My assumption 10 lakhs. If it's not there also, it's fine. It's just for you to connect better. Unamortized preliminary expenses means what? In income tax, expense is not allowed. Unamortized preliminary expense. Do you know this term or not? Expense is not allowed. That means in books of accounts it's allowed. Huh? Books of accounts it is allowed. So it is not allowed here, but allowed. 30, okay. Allowed here. So my profit will be. Which is correct? Which is wrong? From here I have 2. So I have to increase my profit. So 2. P&L account. Debit what? DTA. How much? Difference into tax rate 15,000 DT. This is shortcut for exam quickly. Even without 10 lakhs you can do. How? In your mind what you should think is, it is unamortized in income tax. So profits are higher. Amortized in books. Profits are. Because my profits are low here profits are high, I would have paid more tax. Advance tax this year. Whenever I allow this expense, you will get that benefit. Therefore, deferred tax asset, able to follow. So, now my question is, sir, deferred tax asset 15,000. Deferred tax liability, I will show separately. Why should I do net off? Can I net off and show deferred tax liability 1,35,000 is the question. How many of you yes? How many of you no? No, not allowed. Standard says, they just use one term. It is allowed to be set off whenever there is a, they say whenever there is a legal right to set off. Legal right to set off. In simple what they are saying, if the both deferred tax and deferred tax liability and asset belongs to the same head of income, you can set off. They don't use the term head of income. Legal right means that is the implication. If deferred tax liability is because of PGBP, asset is maybe because of capital gains chapter, you cannot set off. Able to follow? Very, very important. If this difference is because of the same head of income, then you set off. Here both are same head or different head. This much limited knowledge you need from income tax. That this you will know, no. So set off both and write deferred tax liability 1,35,000 is your answer. Easy or difficult, guys? Can I do one more sum or you want break, lunch break? Okay. So with this deferred tax, what? Yes. We have not gone there yet. I'm only introducing the concept. We are still going to see that. Okay. I have not taught them what is all of that. Now this is the first question you solve. Okay. Unamortized expense means expense which is not debited to P&L. It's called unamortized preliminary expense. It's there in the balance sheet asset side. Preliminary expense is there, no, in the balance sheet, which is not yet amortized. Online, yes, somebody had a doubt. Purila, kadasi? Set off now, see. Here we have deferred tax liability 150, deferred tax asset 15,000. ரெண்டுமே adjust பண்ணி deferred tax liability 1,35,000 காட்ட முடியுமான்னு கேக்குறான். Yeah, we can do it if there is legal right for set off. Legal right means what? Both falls in the same head of income. Okay. So I will go with majority. One more sum for 5 minutes or break. Majority sum, break, online. Okay, everybody wants break. I will not be cruel, guys. How long do you want lunch break? You guys choose 30, 45, 1 hour. I'm okay with anything. Guys, 2 o'clock. Okay, 2 o'clock will resume. I think it's more than 45 minutes, no? Yeah, less than 50. 2 p.m. will resume. So it's 52 minutes break. Okay. 2 p.m. class will resume. Don't eat biryani and come. You have to continue. So. Okay, can we start, guys? Anybody is waiting for anybody to come? That's it. I think everyone's here, no? And online, I think 2 are yet to come. No worries. So far what we saw till now, we just started off with AS4, we finished AS4. AS4 talks about events occurring after balance sheet till the date on which financial statements are approved by the competent authority, classified as adjusting and non-adjusting. Adjusting gives additional evidence, non-adjusting events are new events. Adjusting means you will make change in P&L, assets and liabilities. Non-adjusting, nothing I will do. Is it material? Yes, both report. Not material, nothing affecting going concern, it becomes adjusting event. Then we came to deferred tax. Standard is called accounting for taxes on income. Accounting for taxes on income. AS4 is called contingencies and events occurring after balance sheet date. So now we saw concept of what is DTL, concept of what is DTA. This part we finished, correct? We solved one question. Now we'll proceed to the next question. Question number 4. Shashank, read it.
Omega Limited is working on different projects which are likely to be completed within 3 years period. It recognizes revenue from these contracts on percentage of completion method for financial statements during 2014-15, 15-16 and 16-17 for 11 lakh rupees, 16 lakh rupees and 21 lakh rupees respectively. However, for income tax purpose, it has adopted the completed contract method under which it has recognized revenue of rupees 7 lakh, 18 lakh and 23 lakh for the years 2014-15, 15-16 and 16-17 respectively. Income tax rate is 35%. Compute the amount of deferred tax asset or liability for the years 2014-15, 15-16 and 16-17.
Those who have just joined us online, we have just started with question number 4. So have a read for the question. Write the answer somewhere notebook, guys. You will get the book. I'm not sure why they're delaying. Soft copy is sent. Yes. So facts of the question very easy. They are saying 14, 15, 15, 16, 16, 17 are the 3 years. I will refer to it as year 1, year 2, year 3 for simplicity purpose. They are saying there is a project that is completed within the next 3 years period. It recognizes revenue from these contracts on percentage of completion method for financial statements 14, 15, 15, 16 and 16, 17. Which books of accounts is using what? Percentage of completed method for the years this, and then for income tax purpose they are saying completed contract. They are using completed contract method. So two different methods, both are allowed. Both are allowed as per AS7. Both are allowed, but income tax what's allowed? Completed contract method or percentage of completion method? In reality, percentage of completed, because there only then they will get more revenue, correct? It has recognized the revenue of 7 lakhs, 18 and 23 lakhs. So we will quickly solve. You write down 3 years, 2014, 15, next. So we have 14, 15, 15, 16 and ideally you should not be waiting for me. I will just give you the structure. You are only going to solve the sum. Books of accounts. What is the income, guys? 3 years. 11 lakhs. 16 now. 16 lakhs and 21 lakhs. 11, 16, 21 lakhs. Those who are watching online, write with me. You have to write ahead of me, not with me. You have to write ahead of me. Keep answering when I'm asking. Total is how much, guys? 48 lakhs. As we keep going, me writing on the board will keep reducing. Next, as per income tax, we have 7 lakhs, 18 lakhs and 23 lakhs. Total. Total is matching how? Different numbers, no? Based on method, turnover will change, but total will be same. Total will be same. So that means what they're trying to communicate. Total income over the period of 3 years, over the period of 3 years is same, but individually in each of these years, because of different method adopted, my profit will change. This is my income, my profit will change. Correct? Following. So I have to see first the logic, then shortcut. Okay. First year books of accounts, how much I'm recording income? 11 lakhs. 11 lakhs income tax. Because income tax is lower income, they will pay higher tax or lower tax? Lower tax for year number 1. However, year number 2 they are having higher income. Year number 3 they are having higher income. So those years they will pay more tax. So basically what is happening? This year I am paying lower tax, I am saving tax. My liability is deferred to future years. Therefore I have to create what? DTL. This is logic. Now exam, sir. Wow, I don't have time for thinking all this in exam. Which is correct? Which is wrong? What is the difference? Write the difference. Actually for this minus is not required because it's not. It's a concept. It's a concept. So it's not a 2 lakh difference. 2 lakhs. Which is correct, guys? Books of accounts is not correct. Always remember this. Don't forget. Books of accounts is not correct. Tax only is correct. So books of accounts I have to reduce up. How much I have to reduce? Therefore tax, deferred tax, 4 lakhs into 35%. You will get 1,40,000. Deferred tax, asset or liability? Because I am reducing debit P&L, credit deferred tax liability. Next year? Next year, guys? 70,000. Next year? What is this? Deferred tax. How many of your deferred tax asset? How many of your deferred tax liabilities being reversed? It is not a deferred tax asset. See year 2. Correct, sir. Year 2 profit is high. I am increasing. But I am increasing this year because of effect of last year. So, in simple, first year I created, what is the entry for first year? P&L account debit to DTL. How much? 1,40,000. Year 2, ideally what I should do for this 70,000, I have to credit P&L. You have two options. Either debit DTA or debit this what is credit, which is more reasonable and correct. Because this is reversal of a previous creation. So I will reverse. These both will be 70,000 reversal. Understood? Clear, guys? Easy or difficult? That's all. 4 marks over. So what is the question? How much you have to write? First year you have to write 1,40,000 DTL created. Year 2 and year 3 DTL reversed. That's all. Should I write entry in exam? Entry should I write? If you want you can write. Otherwise it is optional. Optional to write the entry. Following up. Clear? But in question paper they are saying pass necessary journal entries. You should know how to pass. Anything difficult here? Increase the profit means credit profit. So what is debit? Deferred tax asset. Profit should decrease means debit P&L. So what's credit? Deferred tax liability. Exam what we are going to do? Shortcut or concept? Shortcut. So this question, oh, you want to copy down, no? What is that to copy down? Nothing. Table over. Easy or difficult, guys? Age 22. Fine. Next. Now next concept, guys, follow. All this time I have been saying Online, yes, Nityashri. Okay, no. You're on mute. Doubt? Okay, அவங்களும் தூங்கிட்டாங்க போல. Anybody, any doubt, please unmute and ask. Now, proceeding further. Now, in all these examples, what we saw, there is a difference in 1 year of income. Because of tax adjustment, there is difference in 1 year. Depreciation, first example. Interest 43B, second example. But later, the depreciation is being reversed. The difference is being, that means difference is there in 1 year, some year. That difference is being adjusted in some year. For example, classic example here, difference is so much, adjusted in subsequent years. That is why total is coming to, assume Income Tax Act is saying, no, my income for last year is going to be 25 lakhs. This will be, that means there is going to be a, and project is completed. I am saying books of accounts 48, income tax saying no, 50 lakhs. Again there is a difference. But this difference, will it reverse later? It's not going to reverse. So you tell me some examples in income tax which will create a difference between books of accounts and income tax books. Like depreciation will create difference, but it's reversed later. Subsequently it gets reversed. But there are some items where reversal will not happen. Like it creates a difference, but the difference will remain forever. Understand what I'm saying? Because of income tax items, there are so many. Can you tell me some examples? 35. What is 35 AD? Specified business. You get some deduction, 100% deduction. Correct. Then section 10 AA. SEZ. SEZ, if I am operating, income tax will be income 0. Books of accounts, I will have some X amount of profit. Correct. Because of this, here tax will be 0. Here also for that year 0, but this difference will be there forever. Now amended, but before, like 2 years back, dividend income not taxable in my hands. So books of accounts will show dividend income taxable. Profit will be, books of accounts profit can be 10 lakhs dividend received. Income tax will be 0 because exempt. Correct? Before, now it's not exempt. Okay. So these differences, will they reverse in the future? They will not. Correct? So we are classifying the difference into 2 buckets. One is a difference, what we saw so far is a difference which will reverse in the future. So this difference is temporary or permanent? The difference which came and got reversed are all examples. Temporary difference. Now I told you 10 AA, you told me 35 AD, like this, so many are there. You can keep giving numbers, correct? For these differences are permanent. That means if there is going to be a permanent difference, then what happens? That means that books of accounts and profit, that yearly difference will remain forever. Why I am creating adjustment DTA, DTL? Because it's going to reverse later. So I will not create what? DTA or DTL. Did you understand the logic, guys? Online students? Online. Here understood? Online, yes. If you don't understand, please let me know. Okay. So what is happening? Following, guys. Puridappa. Now, so in simple, if a difference is going to be permanent difference, I will not create DTA, DTL. Here I will create DTA, DTL. In simple example, just assume for the time being dividend is exempt in my hands. Books of accounts will have, let's say, 5 lakhs dividend in my net profit. Net profit will include 5 lakhs dividend. Income tax records will have 0. This difference will be there forever. So I will not. Why should I create DTA? DTA, DTL is created for what purpose? Because of a difference, and such a difference is a timing difference. What is the timing? Timing of taxability. Instead of taxing in 14-15, I am taxing in 15-16, 16-17. Because of different time, different point of taxation, I am creating DTA, DTL to make the difference. Such a difference is a temporary difference. It's called temporary timing difference. Timing difference is temporary, gets reversed later. permanent difference, that is also a timing difference, but that timing difference will remain for perpetuity. Because it's going to remain for perpetuity, even if I create DTA DTL, that will remain in my balance sheet forever. I can't reverse it because difference is not reversing. Understood? So I will not create. Following. Now next example, I have, let's say, current year P&L account. This is books of accounts. This is income tax books. Current year I have a loss of, net loss 2 lakhs. In my books how I will show 2 lakhs loss. Presentation, financial statements, will I show 0 or 2 lakhs? In brackets, same 2 lakhs in income tax, how will they present? Current year, they will show us 0 and they will say carry forward. If eligible to carry forward, how much? 2 lakhs. So on the presentation, my books will have what? 2 lakhs in loss. This will have what? 0. This is assume year number 1. Year number 2, what is happening? Year number 2, there is a difference here. 2 lakhs loss in where books of accounts, 0 is income tax. So look carefully. Year number 2, in books of accounts, I am earning a profit of 3 lakhs. Assume income tax also 3 lakhs. Okay. Books of accounts, will I show in my P&L 3 lakhs or 3 lakhs minus 2 lakhs 1 lakh? P&L will show, only reserves will do adjustment. P&L will still show what? But income tax, what I will show? Will I show 3 lakhs or will I do 3 lakhs minus set off carry forward? That 1 lakh will show 3 lakhs minus 1 lakh. So what is happening? If you look at this carefully, when there is an unabsorbed loss, carry forward loss, first year there is a difference of 2 lakhs, because of which this year tax is 0. But next year, even though my income books is higher, even though my books is showing higher, tax is saying what? Pay less tax. Able to follow? Able to follow? So this difference, it was created in which year? This year it was created. Reversed when? Should I create DTA or DTL? Creation is always in the year of creation. DTA or DTL? Shortcut you use, no? Shortcut, which is correct? Income tax is correct. Books is, I have lost 2 lakhs, that is 1 lakh profit. I have to move from loss to, therefore I have to credit my to P&L account, debit what? How much? 2 lakhs into tax rate, whatever the tax rate. Able to follow? Coming there. Okay. Able to follow, guys? No. This you will create DTA. Following, guys. Now follow carefully. This year loss, I'll give an example. Let's say Fiat company. Heavy losses, they have crores of loss. So year 1, 10,000 crores loss, everything in thousands, okay. 10,000 crores loss. Year number 2, 20,000 crores loss, Vodafone Idea. Vodafone Idea itself you will take. Year number 3, now 45,000 crore loss you have. In India, biggest loss making company is Vodafone Idea. V is the biggest loss making company. Why? How many have you shifted from Vodafone Idea to other networks in last 1-2 years? See here it's a 1, 2, 3, 4. So everybody are leaving means what? Revenue will fall. So biggest loss making company in India is Vodafone India, 40,000 crores. So what they are saying, hey, we are having loss this year. Books of accounts is 45,000 crores loss. Income tax is showing 0. Set off and carry forward. Therefore, I will create deferred tax asset. Deferred tax asset account debit to P&L. This into tax rate 40%. So I will create how much? 45 into 40%. Make it 50% for simple. Okay, 18. 18 how much? 18 crores. So I'm 18,000 crores, not 18 crores. This is 45,000 crores loss, no. So I will create book entry and reduce my profit, reduce my loss. So my profit, my loss will reduce from 45 to 27, correct? No, 27, yeah. reduced to 27. So my loss is reducing, no. So what investors will think, loss reduced, good. This year, next year also again loss, again DTA, my DTA in balance sheet will be 1 lakh crores or 10,000 crores or 50,000 crores, it will keep increasing. Can I do that? Guys, what I told you, because of timing difference, I will create DTA. So I will keep creating, Vodafone will be very happy to create what? They will keep creating this, good, no. Why can't they do that? Is it giving true and fair view? Logic behind the standard is what? If a difference comes, it's going to be reversed in the future, I will do it. But for loss, see, depreciation will be reversed now. Because automatically I have to do nothing, it will be reversed. Interest will be reversed when I pay. But this one, when it will be reversed? It will be reversed only when the company earns profit, correct? So I can create DTA only if the company is going to earn profit. So what this company did, Vodafone, they are bringing brand ambassadors. Dhoni is coming, everybody is coming and doing brand ambassadors, TV ads. Still loss is increasing. Can I say I spent 10,000 crores on marketing, from now profit will come? Can I create DTA? You have to actually show what profits are coming. Actually you have to show. So what they're saying, when you create DTA, but when you're going to create DTA because of carry forward losses, business loss or unabsorbed depreciation. You know what's unabsorbed depreciation? Income tax. When I will absorb this depreciation in the future? Only when I earn profits. They are saying, don't create DTA unless you are certain company will make what? Profits. How certain? Virtually certain. They use the term virtually certain. So they got one big four, Vodafone got some big four, Deloitte, KPMG came, did some projections. They told in the next 5 years you will earn profits. They have signed it. They have signed it. Everything is good. They have signed it. Okay. Big four has given, this company will revive in the next 5 years. They are going to make a bounce back. Don't worry. Can I say it's virtually certain? Auditor sign. Projection, future projection. Can I rely on that? No. Able to follow what I'm saying now. Just because somebody gave projections, budget, marketing expense, no. The term virtually certain means I should see it should happen. Company next year loss from 45,000 crores should come down to 10,000 crores. Is it virtually certain? No. Still no. 10 rupees profit, virtually certain. I should start making the profits. Then only you can create what? It should be virtually certain that it is decreasing. Only then you can make. I am making profits. Current year, reserves might be high, but current year I should start making profits. Only when you are virtually certain, create what? DTA. Understanding logic of why. You saw Vodafone Idea will create huge DTA, keep an asset. That is not even a true asset. Okay. So what they are saying, timing difference in AS22 is of two types, permanent timing difference and temporary timing difference. Temporary is example we saw 43B section 32, two examples. Difference that will be reversed in the permanent difference that will never be reversed. Here I gave example dividend, but when I wrote the example it was dividend was not taxable. Latest budget they taxed it, so we have to strike it off. Replace with maybe 10 AA, 35D, all of that. No need to create DTA or DTL. Where tax profit, this shortcut I gave here, concept no space for writing. So where tax profits are more than, tax is more, accounts is less, I have to go up, create DTA because DTA debit to PNL. Where tax profits are less than, create what? DTL. That's all. Following up. Then items contributing to DTA, we just now saw unabsorbed depreciation or carry forward business loss. Create DTA only if there is virtual certainty. Other items create DTA if there is reasonable certainty. Like 43B, how are you certain you will pay interest next year? That reasonable certainty, I will pay. So making a payment, but earning something, you need to be virtually certain. Following up. Online, able to follow guys, online students. Okay. Now, We have only two more concepts. One more sum I think I can do. Yeah, let us do one more sum before you all start sleeping. That is the problem of post-lunch session. Can't help it. Question 3. Somebody else. Ask Vinay. So go through the question, take a minute time, read and understand. Again, same table, just like how you did for 14, the previous sum. Particulars, 3 years, write the amount, write the difference, create DTA or DTL. That's all. Start, guys. Don't wait for me. Start. Online students, don't wait for me. Start. I'll dictate the template. From now, no more board. Start, guys. Open a table, particulars, with how many columns? Totally how many columns? Particulars, 3 years, one is total, 5 columns. Guys, for the books, just once I give you the break, no, just go collect from Vinay. Vinay is there, go collect it. Anytime you can go collect it. Yeah, that's same, this format you write. You need to open a table like this. I'll dictate, guys, follow. I'll give you a rough draft, particulars. What are the 3 years here? 14, 15, 15, 16. 14, 15. We get total, that's all. Then here you will write books of accounts. You can write any order. Sir, should I write first the books of accounts? My wish. Books of accounts, second. I'm writing short forms, guys. Don't get that habit from me. Write fully, profits as per books, profit as per tax. See, I don't want to write fully. I can write. You will copy. We will not have time. Class is for you to solve. Class is for you to solve. Books of accounts and income tax. Here, what is that? Online live students, I hope you're doing. There is a loss of 2 lakhs books of accounts. Huh? Here, profit 1 lakh. 1,20,000 total. This total is a reserves and surplus. Reserves and surplus, cumulative all years. Here, first year. This is the same numbers for all the years. So here you will write 0. Year 2. Year 2 will be. How many of you 1 lakh year 2? How many of you 0? Year 2 will also be 0. How 0? 1 lakh profit minus we have carry forward loss. No. Carry forward loss of 2 lakhs. I will still have a carry forward of 1 lakh for the next year. This year, how 20,000? Carry forward loss again. So 1,20,000 is the profit minus 1 lakh carry forward loss. Total is, that's all. Understood? Now after the sum is, hello, should I solve DTA detail or are you going to do it quickly? Then third will be, sir, if you, where do I show this? You can even show working note 1 down. Below you can say carry forward, adjusted, all of that. Difference will be Here one difference. 2 lakhs. Which is lower? Books of accounts is -2, IT is 0. So I have to increase or decrease? Increase. So increase means I have to credit my P&L. I have to increase profit means credit P&L. Therefore create what? DTA. Entry will be DTA to P&L. Account how much? 2 lakhs into what is the tax rate? So 80,000. Following up, guys. So same way you will do for this year. How much you are getting, guys? Here you will get difference of. Again you have difference of 1 lakh. Here difference of 1 lakh. Basically, this 2 lakhs is being reversed in subsequent years. Muthu purida. Here how to do? So second time getting confused. Book profit is 1 lakh. Income taxes, which is correct? Income tax is correct. So I have to reduce my profit. To reduce my profit, P&L account debit to deferred tax liability. But here I am not going to create liability. I am going to reverse my deferred tax asset. Therefore, it will be P&L account debit to DTA. This is being reversed to the extent of 40,000. Not able to understand. Sure. All of you understood our second row. Then third year also same 40,000. It's over. Clear, guys? How to solve in logic? Sir, no need, sir. We'll use which is correct, which is wrong for exam. Option is left to you, but shortcut used for cross verification of your answer. And speed. For speed, obviously, you'll need the shortcut. That's it. This question is done. Question 3. So only 2 more questions left. Okay. So far, A is 22. Easy or difficult or medium? Easy. 2 more concepts. Okay. Now, 2 more concepts. Do you know, heard of SCZ? Special Economic Zone. What is SCZ?
Sir, it's a zone created by government to for growth.
Export. For exporting. No, why export? Why should they promote export? Did I tell you in law class about forex? That difference I told. Okay. So I'll quickly revise for the other students. Say for example, your name I forgot. Amit is sitting in Chennai. I'll go follow, guys. Why SCZ? You need to know logic. Amit is sitting in Chennai. He has only, let's say, some 10,000 rupees with him. He wants to buy, he's selling some goods. He's an exporter, some techie, he's doing some export service. Somebody is sitting in US. He sold some goods or service to the party in US. He's going to pay Amit in how? Dollars or rupees? So let's say he pays Amit $100. Amit got $100. He came to class for paying fees with that. Will we take? He went to theatre for movie. Will they accept? But what he'll do with it? Nothing he can do. So he goes to Reserve Bank of India. Let's say direct RBI. No forex and all, because they're all working with RBI. Directly goes to RBI. Gives RBI how much? $100. RBI gives him rupees. He's happy. RBI currently had nothing. They can print rupees. RBI can print rupees, but they can print dollars. So they have $100. They kept in pocket. Again next month Amit is going to RBI and saying, I'm traveling to US for a project. I need $10,000. Here, take rupees. RBI checked inside. We have only $100. We can't give you $10,000. Can they say that? Whatever you need, they'll give. How much they have RBI? How much they need? So they are short of. So what they'll do? 9,000 or 900? 9,900. What they'll do? They have to borrow. So that they'll go. They'll go beg the World Bank. Give me dollars. They'll go to US banks. Give me dollars. When COVID came, demand first wave, sanitizer, mask, nobody got anywhere. Once demand was high, price increased down. So world over, demand for dollars is high. Because RBI is not having dollars, reason, when you export goods, dollars is coming in. When foreigners are making investment in India, dollars is coming in. When foreigners come India for tourism purpose, dollars are coming in. But when I am going out for tourism, when I am going out for education, When I am going doing import, dollars will, need is there. In India, this is high or this is high. This import is high, foreign tourism is high, education in abroad is high. Therefore, what government is doing, all this make in India, come on, make in India and export. That's why to increase our forex reserves. So since forex reserves are not enough, demand is high, dollar rate is increasing. Now, for that purpose, they kept what? SEZ. SEZ are recognized areas in the country, throughout the country, where from there if you operate, that means you have to only export. If you export, taxes 0. So if you see, special economic zone, these are actually, this is not Google image, this is real images. Okay, special economic zone, if I just put, there are so many there in Chennai. See, all these are real buildings in outskirts of Chennai, all Tambram, all of that, where will be a huge 100 acres, thousands of acres, not 100, thousands of acres. Every company will be there, they will SIPCO and all of that, they will export. What is the purpose for tax to be 0? Now assume I am a company, just assume I am a company, I am operating in SEZ. I am operating in year 1 to year 10, or let's say 5. How many years I am operating? There is going to be difference of, because books of accounts will always have some amount of income, 7 lakhs, 10 lakhs something, but income tax will have 0. Why? Because no tax, because there is no tax, correct? Able to follow? Because tax is not there. So this difference is a permanent timing difference, permanent timing difference. But then what happened? Chidambaram, ex-finance minister, he said many companies are opening in SEZ, they're earning profits. They're earning profits, not paying tax. Companies earning loss, having loss, not paying tax. I don't like all of this. They introduced a new concept called MAT, which says minimum alternate tax. So even if you're in SEZ, you have to pay tax. So even if you're having loss, you have to pay tax. See a final concept for us, limited purpose. I'll explain what we have. So now we will have MAT will be at 18.5% of what? So you have books of accounts profit of. From here only you will do add less and go to income tax profits, correct? That is called your PGBP. It's called PGBP, correct? So from here again, MAT is one more thing. They will call book profits as per MAT under section 115 JB of income tax. So not a, see, MAT is a concept which will take 15 hours for discussion in CA final. Okay. For now, limited purpose, what we will see is book profits will be computed from income tax plus or minus. So from here plus minus what we get? PGBP. From PGBP again some plus minus we get what? Book profits. So we have 3 incomes. If this is 1 lakh, this can be maybe 3 lakhs, this can be 5 lakhs. Example, tax will be paid on what? Question now. Will I pay tax on this? So leave it out of the question. I don't care what is the books of accounts profit. Tax has to be only on income tax or this. So which one to pay is a question. People start asking which one to pay. So I'll give you examples. Let's say tax as per this regular, what you know, some amount is coming X. Tax as per this, some amount is coming Y. So let's see examples. Year 1, year 2, year 3. Income tax, our PGBP, our new friend MAT. Okay. Income tax, see, I can tell you in 2 minutes guys, but concept is important. Wake her up quickly. So income tax, 2 lakhs is the tax payable. MAT is saying you have to pay 3 lakhs. How much to pay? How much should I pay? Logic guys, I know they have not gone to CA final yet. How much you have to pay? Because MAT full form is minimum alternate tax. So minimum you have to pay 3 lakhs. So you have to pay. I paid 3 lakhs. In company is saying okay, okay, fine, I will pay. Year 2, here it is 3 lakhs. Here it is 2 lakhs. Possibilities there are. Now department, what should I pay? 3 or 2 or? Then government told rule, you have to pay. Actually you have to pay this only, PGBP. But if PGBP is less than MAT, you pay MAT. PGBP is more than MAT, now you pay PGBP. So they said you have to pay 3 lakhs. Then the assessee told, either director you can tell pay whichever is higher. You want more tax. How is this fair? Then they went representation, what is all this? Not fair. I am paying more tax. You are calling minimum alternate tax, but I am paying maximum tax. This is not fair. So everybody started fighting. Then government said, okay, okay, fine, I will help you. They are saying, how much you paid this year? If MAT was not there, how much would you have paid? 2 lakhs. So extra, how much you paid? So this 1 lakh I will give you as credit. Call MAT credit. Like GST credit money, I am giving MAT credit. You paid extra or no? 1 lakh credit, huh? Like ITC, they are giving 1 lakh credit, which this year I got. But you have to use within 20 years. So we will see how we can use this. This year, how much I have to pay? 3 lakhs. But minimum, how much I have to pay? Therefore, you pay 3 lakhs. But you have how much credit? Adjust this and pay balance. So you end up paying minimum. Following up. Now, year number 3. 10 lakhs. 15 lakhs. How much should I pay? 15 lakhs. I will pay 15 lakhs. What is my credit? I will keep as my credit. Credit, generally credit will be an asset in my balance sheet. MAT credit. Year number 4. 12 lakhs. 20 lakhs. How much I will pay? My credit. All this year 8 plus previous year 5. So I will have 5 plus 8. 13 lakhs. How sir 8 came? 20 minus 12. Year number 5. Let's say 20 lakhs. Here 25 lakhs. Which should I pay? No, I'll just change it. Enough. Opposite, yeah. 25 lakhs here. 20 lakhs here. Which one should I pay? 25. How much credit I have? So can I do 25 minus 13? 12 lakhs I'll pay. Correct? They are saying you adjust the credit, but adjust in such a way, minimum you pay how much? Minimum you have to pay 20. So what they are saying, so they are not allowing me to use the credit fully. So they are saying how much I should pay? 20 lakhs. So if I can pay 20 lakhs, I am supposed to pay 25. 5 lakhs I can adjust with this. So 13 minus 5 will become. So credit only 5 lakhs I am allowed to use. So end of the day, lower of these two you have to pay. Pay higher, then credit, lower you have to pay. So companies told, okay fine, some remedy I got, let me use this. So they are doing this. Okay, so this is MAT credit. This is how MAT operates. This is not there in our exam, but why we are learning this? Now, there is going to be 3 profits in your question. Books of accounts profit, income tax profit and MAT profit. All this time you are comparing what? BOA and IT for computing what? Deferred tax liability or asset. Now new thing came, no. So triangle, triple comparison I have to do, no. It gets difficult. So what they standard told, MAT is not a tax payable, it's more of a penal tax, it's a punishment. Penal tax to be paid when company, the logic behind introducing this in budget is, company is making loss, you are unable to contribute for the country's growth, so you pay at least tax to us. That is the argument they made for introducing MAT. You are having loss, at least you contribute, you are having a company, nothing you are doing, you are not able to do anything, you are only incurring loss, at least give us some tax. So it is more like punishing the person for earning loss, having loss. So they are saying, AS 22 says, when a question with MAT comes, ignore MAT. Do some as if MAT is not there. That's all. Okay. But when you debit to P&L, let's take this case. Let's take where MAT is higher. Okay, this case 2 lakhs and 3 lakhs, correct? When I debit to PNL, I will have PGBP debit how much? MAT debit over and above PGBP how much? 1 lakh will be there. These two will be cash paid, correct? But apart from this, we'll also have DTL or DT, some amount, X amount. So in debit PNL, you will have 3 tax items debited to your PNL. What are those 3? PGBP income tax, MAT item, if it is, MAT will come only if it is above income tax, and last one, DTL or DTA. Which one is actually cash outflow? First and second. Third one is book entry, understood? But for the third one, this one, I will create this ignoring as if MAT is not there. That's all. Understood logic fully. Now we'll go solve one sum. Question number 2. Online student, can I have Vijay Kumar to read question number 2? Vijay, are you there in the class? Napa lunch side. He was talking in the morning also. Akash D, are you there in the class? Yeah, Akash, can you read question 2 for us? I've given you soft copy also in the group. That's all. You have to compute what DTA or DTA, an amount of profit to be tax to be debited to profit and loss account. So first, what you're going to do? Compute DTA or DTL as if this question did not have MAT. So ignore this. This question le illa. This question le illa. Illama you compute what? DTA or DTL. Can you compute that? Oh, question. Online students, give me the answer. Compute DTA or DTL. Siddharth got 1,08,000. This question came in November 20 or Jan 21, if you remember. Huh? Both it came out. 2 times on it. Oh. Please skip it. Oh, okay. 1,08,000. Everybody are getting 1,08,000 or some other answer? Everybody 1,08,000. Deferred tax liability or asset? Online deferred tax liability. That's the answer. Over some. That's all. So, that we'll see. That's what I'm saying. Concept is over. Now, book profit is how much, guys? 6 lakhs. Then income tax is 60,000. MAT is 7,50,000 now. Amount I want 3 lakh. We will find tax rate for each of these. Book profit is how much given us? 20% of 20%. Income tax is given us. They have not given anything. 20. MAT is given us. Multiply and compute tax, guys. This is 26,250. Ideally, for these two, you should not use calculator. Only for the third one, you should be using. Now, for this only, all of you anyway did. You computed what? This and this up. This difference is only 1,08,000, which is nothing but your deferred tax liability. In simple terms, book profit 6 lakhs, income tax 60. This is higher, which is wrong. Reduce in difference into 5,40,000 into 20%, 1,08,000. Purida Swati. Okay. Yeah, I'll come. Now come to your P&L debit, guys. P&L debit. In my P&L debit, deferred tax liability will be 8,000. How much tax? That is one fixed correct of. That is going to be a debit for 1,08,000. I have to find two other components if they are there. Income tax is saying, I'll read it year 1, year 2, year 3. So year 1 income tax is saying 12,000. MAT is saying 26. How much will I pay? How much should I pay, guys? 26,250. But I will have a credit of. So, sorry, 14,250 I will have credit. So my debit will be, normal income tax will be 12,000. Beyond this MAT, because of MAT additional debit is 14,000. So my total debit to P&L comes to 1,20,000. This is nothing but 1,20,000 plus 14, 1,00,000. That's all. This is going to be my total debit to profit and loss account. Anything complicated here? 4 marks. When I wrote my CA final, this sum came. That time I didn't know. That time I lost 4 marks, but never I thought that's sum I'll be teaching. So, if you look at this, your tax expense, which gets debited to P&L account is current tax plus nothing but your 1,08,000 plus 12,000. Current tax, what amount is actually paid to government? Deferred tax. See, current tax includes two parts. Where here current tax is 26,250 includes one part is MAT, one part is regular income tax. Tax expense, total tax component recognized in accounting books. Clear? Huh? Now we finished MAT. No, MAT is in the nature of penal tax, payment of higher amount of tax where normal tax is nil or 0. Deferred tax should be computed only on the basis of normal tax and not on the basis of MAT. That's all. So if a similar sum comes with different numbers, you will be able to do. Easy or difficult? Last 2 more concepts left. Perfect. Last 2 more concepts. No, good. Let them participate. No. That time difference will be there in Zoom. Our example, now we took the depreciation example. I started the class with that. No. Depreciation as per books of accounts. Depreciation as per income tax rate. This you have to make a note, not there in material. 20, 20, 20, 20, 20. Here it is. 100. Difference 80. Difference is how much? 20. Here we multiplied. We got 24. 6,666. Remember our tax rate was 30%. This all of you remember. Now I am throwing a question on you. You tell me the answer. This year tax rate was 30%, so 24. Next year also tax rate was, so I got 6. But this year what government did, budget came, they changed tax rate. Possibility is there. So tax rate changed to 25%. So if I keep 25%, this year 20 into 25%, this year 5, this year 5. So already 24 minus 6, minus 5, minus 5, minus 5, balance will be, 3 is left in deferred tax liability after 5 years. Possibility is there. What to do? This you can mark as important for your attempt. ICA has illustration yet to be tested. So understanding what I am trying to say, there is a difference because of change in tax rate, full amount did not get reversed. Common, what to do? You tell logic. Year 6 year 6-3, is that logic? Does it make sense? That means not a permanent difference. Ideally I should have not created for 24. I should have created only for 21. But I won't know in that year, no. Only future year tax will change. So they are saying in which year the tax rate is going to change, that year this extra 3 you debit. Extra 3 you debit will become what? 8. Then 5, 5 it will become what? 0. That's all, understood? So the year of where the tax rate changes, that differential amount you have to adjust, make the adjustment plus or minus. This I am expecting if AS22 comes in exam, this question is my pick this time. This type of question. Okay. Study mat has one illustration. We just did one illustration. Our illustration 3 will be debited extra. Understood? So far not tested, but long due pending. In deferred tax, every concept has been tested except this in your exams. Math didn't come for many times. November 20, Jan 21. 2 times they asked. Oh, I was getting there next. That was next question. Now tax rate. So now Ishwar is saying, sir, it is easy, sir. No, sir, tax rate reduced. You are also saying, okay, what if tax rate becomes 35%? Possibility. So if it's 35, 20 into 35 will be 20 into 35. 7, 7, 7. This year I can do 7. Next year I can do 7. But last year I have balance only for doing. Because 3 is shortfall. Huh? So here you create additional detail for 3. That means what? This year debit is 7. Huh? If I have to create for 3, credit will be 3. So net off and create only debit only for. That's all. In the year of change, make the change such that the next years it will go from. What if next year also they change the rate? Same concept. That's all. It's like the change of rate of depreciation. You will make an adjustment. That's all. Puridappa. Can I proceed to last concept? Online understood till here. Muthu is waiting. Tax holiday. Very simple and easiest concept in AS22. I'll give an example. Let's say, do you know government keeps giving benefits? Start business in Northeast India. Free, no tax for next 5 years. No tax for next 7 years. Development of nation, keep doing, they'll keep giving, come to my country, come to my state and develop. So let's say Tamil Nadu government told, we want more development. Anybody sets up industries in OMR IT hub before, IT sector, they got profit benefits. Now it's fully developed. So let's say, they say you come to my country and invest. Next 5 years, no income tax. Possibility? Yes. Is it an SEZ? No. So let's say year 1, year 2, year 3, year 4, year 5. Let us keep, for simplicity purpose, 3 years no tax. Okay, totally period is 5 years, 3 years no tax. Can I use the same depreciation example? Okay, so books of accounts, because you know that, okay, it's mainly concept. Income tax, here it is. Here it is. 100, 0, 0, 0, 0. Difference will be. Now, if you follow carefully, difference is arising when? The tax difference this year. The year difference is created. Am I paying tax? Anyway, I won't pay tax, even I have tax holiday. Year 2, in our example, year 2 tax was payable because depreciation was 0. But in this case, if tax holiday, will I pay year 2 tax? Year 3 tax? Year 4? Yes. So, if you see carefully, difference arising in this period, which is the tax holiday period, what is the amount of difference? 80. A part of the difference is reversing within tax holiday, year 2 and year 3, 2020. Another part, 2020 is reversing after tax holiday. So, difference is created in which year? Year 1. That year taxes 0. Reversal in year 2, that year taxes. Again reversal in year 3, that year taxes. So, tax difference creation year 0. Reversal year also 0. So should I create DTA DTL? Not required. Why? Because if everything is tax holiday SEZ, no need. That means this difference created and reversed in the tax holiday period. That means this difference is not creating a tax impact for me. Therefore, no need to create what? DTA DTL. But this 40 was created when? In tax holiday. but reversed when? After tax holiday. So this time I will pay tax of. So I have to create what? DTA, DTL, correct. So in simple, they are saying where a timing difference, a temporary timing difference, which is created and reversed within the tax holiday period, don't create DTA, DTL. A difference which is created in tax holiday period, reversing after tax holiday, you will create what? DTA, DTL. What if created before tax holiday, reversing in tax holiday, then still I will create. Created before, no difference. In the year of creation, I would have paid that higher, lower tax. Same thing, assume this case, year 5, year 6 and year 7 is there. Assume government is saying, again year 6 and year 7 I will give you tax holiday. Say if depreciation happened in year 5, this year I had to pay the tax difference, but next year need not pay because of difference. So basically the creation and reversal is in the tax holiday, no need to create DTL, but any one is there here and there, you will create what? Following. Not able to get it. Sorry? What about this case then? See, year 1, year 2, created in tax holiday, reversed after tax holiday. There how it's getting reversed. See here it's created, reversed later. So you are creating now and reversing later. What if it happens same thing opposite? No, created before. That year tax would have been paid higher. Because of this tax holiday you are not paying tax now. So that reversal adjustment will do. That's all. Following. So now understood logic of guys. Now so what they are saying, tax holiday, timing difference, reversing in tax holiday period, basically it's creation and reversal in tax holiday, ignore. Timing difference originating and reversing in period other than tax holiday, create DTA, DL. So now we will go to last question. Correct. Yes. That's it. All now. So now if you, let's take this question itself. Guys, this year, this question 80 is there. Out of this 80, how much is reversing later? So here I will create DTL. In our case, it was 80 into 30% 24. I will not create for 80. I will create only for 40 into 30%. How much? 12. I will create DTL only for 12 here. Gets reversed in year 4 and year 5. Not following, Rishabh. We will solve a question. You see if you are able to get it. Online, anybody? I'll explain again. Anybody has doubts? Which part you didn't get? No, this you got. This question. This part you got. This you got no. Keep this in the mind. Let's solve the sum. Then you'll get more clarity. So this 80, this 12 you got no. This 12 you understood. Rishabh. Online. One more time, sir. Sure. See, year 1, year 2. I'll come with logic now. Okay. Depreciation as per books. Income tax. See, year 1, 20, 20, 20, 20, 20, 100, 80. Because depreciation is charged higher in year 1, tax becomes 0. But so this year what? I am saving, I told you starting. We are saving how much? 24 as tax. But this tax is going to be paid in the future as 6, 6, 6 and 6. That's why I am creating now and reversing later. But if I am in tax holiday, this year I saved. But next year will I pay 6? I will not pay 6. Next year also will I pay 6? So saving this year is actually a true saving. It's not a saving where you will pay later. That liability which is deferred, no, it is not deferred, it's actually saved. Because this year I am not paying 24, I will not pay 6 in next 2 years. When I will pay actually? Only 4th year, 5th year I will pay how much? 12 lakhs. So since 24 is saved this year, But actual true savings is only 12. Other 12 you are going to pay later. Therefore, create DTL for 12. How this is 12? Difference created during tax holiday. Reversing after tax holiday I will create. Difference created in tax holiday. Reversing within tax holiday. Don't create DTA DTL. Understood online? Abhisha? Or again, I don't mind explaining again also. Understood or not? Or which part you don't understand, let me know. Understood, okay. So we will solve question. Question number 5. Can I have online student? Siddharth, read question 5. Take 2 minutes time, go through the question and start solving and give me, I want compute the deferred tax liability at the end of second year to be charged to P&L account. I want the answer. Start solving. Those who finished, type down your answers. See, I'll explain the question. I'll just give a short brief. Beta Limited is in a full tax-free enterprise for the first 10 years, no tax. And now I am in the second year of operation. Depreciation timing different, resulting in a tax liability in year 1 and year 2, 2000 lakhs. That means I should have paid 2000, but I am not paying. So the deferred tax, what? Compute, look at this, compute the deferred tax liability. So you don't have to think it's asset or liability. They are saying compute what? Liability. Because of depreciation, there is a deferred tax liability which I am not paying today, I have to pay tomorrow. From the third year, it is expected that the timing difference would reverse. In our case, it was 80. Instead of 80, here it is 1000 and difference. They are saying there 80, here it's 1000, 2000. From third year, it will start reversing by 50 lakhs. Our example 666 it reversed. 666 here it's reversing by 50. Assuming tax rate is 40. Compute amount of deferred tax liability to be debited to P&L account. Can you try, guys? 2 minutes. One answer I got. How much? One answer 1040. I don't know if it's correct or wrong. Others. One more answer 240. I don't know if it's correct, guys. You have to try. Give me your answers. Yeah. That means it's like first year I purchased windmill. Second year also I purchased one more windmill. Add both. Yeah, correct. Online answers. Hey, everybody are getting same answer. 1040. Surprising. Either everybody is correct or everybody is wrong. You have to see. Try guys. 2 minutes more. Try. I want you to try in the class. Mistake, it's wrong, but it's fine. If it's wrong, it's fine. Thousand. One more answer. Now only I'm happy. One different answer. 1000. You have to try, apply your mind, you know the concept. All you have to do is, I'll give you a hint. The difference 1000, 2000 created in tax holiday. What is reversing out after tax holiday, you have to create. That part you have to ignore. Others, one more minute. Online I got only answer from Akash. Others, I don't know what you are doing. Whatever answer you get, you give it to me. You want to change the answer? Yeah, you can change, yes. Oh, you're making 1040. So 1000 student made it 1040. So again everybody are on same line. Rishabh, do you want to keep your 240? Oh, he wants to delete 240 also. So everybody is in 1040. Others, some should take 30 seconds to solve. 30 seconds is a lot of time to solve this sum. To put our favorite sum, correct up second. After I solve it, I put it to me. Not get that feeling. Online students, Tamil I use very rarely. Those who don't know Tamil, don't worry. Fully it's going to be in English only. So if you feel, sir, don't use Tamil, let me know. I'll translate for you in Hindi. Those dialogues and all. I don't know Hindi. I'll ask Rishabh. He will translate to me. Then I will tell you. Online, last 1 minute. Give me answer, guys. Sandra also got 1040. Everybody getting same answer. 1040. So let me discuss. Muthu podla. Give up putting up. Apde ukanting. Sir podada podar. Year 1, year 2, year 3. Okay, you can stop, guys. Everybody who got 1040. Good. That's the correct answer. Year 1, how much is created? Year 2, differences. I have to actually create deferred tax on this into 40%. I should have created on this, but out of this 3000, 50 reverse this year, 50 reverse this year, 50, 50 reverse in all these years. In simple, I'll just do 50 into 8 years. It comes to how much? So out of 3000 difference, which is created, 3000 timing difference created in tax holiday, how much is reversed in tax holiday? 400. So 3000 minus 400 into. For exam, you have to do one change. Correct answer, presentation alone. When this is reversing, no. This is reversal of first years or second years. First I'll reverse the first years, FIFO method. So you have to show that FIFO method. What you have to do? Only change for exam is 1000 minus 400 into 40%. That is for year 1. Year 2 will be minus 400. Should I do? Will it come, Shashank? Into 40%. How much? This is 240. That's what this is. 240 was. Answer 1040. Clear? Huh? Sir, how to present this? How I dictated? You have to write first. It is not. If you write one line answer 1040, he will also give 1 mark out of 4. 1 out of 4. That's it. First you have to write concept of timing difference, originating and reversing. That concept is there, no. That paragraph you write. Then you have to write here in the given question 2000 plus 1000 is created in this year. 50 reversed every year. So break up how 400 came. 50 into 8 years. 400 is the timing difference, is reversing in tax holiday. Therefore, for the balance, this 600 plus 2000 only should create timing difference. This is the amount. If you write that full paragraph, 1 page, that's it. That's when you get the score. Clear? Purida tax holiday, sure. So with this, after this, we can take holiday from AS22. Done. AS22 also is over. Nothing else left. Standard easy or difficult? No. You what case? AS4 is anyway easy. Next we will proceed to next standard. Do you want break or can I proceed? Material, okay, I'll give you 5 minutes break. Quickly go collect and come off with admin person. Online students, just 5 minutes. I'm going to start with AS29 post break. 5 minutes break. ஆன்ல போட்டிருக்கான் பட் இங்கே மட்டும் இதை வரதான் தெரியும். ஒன்று இன்னும் வருது பட்
நீங்கள் ஸ்டார்ட் பண்ணுங்க சார்.
Sure,
வாய்ஸ்
sure.
முடிச்சிருக்கேன்.
ஷூர். Okay, let's start, guys. This iPad is connected on charge. It showed 10%, but still charging dropping to 5. No comments. Okay, let's proceed to AS 29. Provisions, contingent liabilities and contingent asset. It talks about provisions, contingent liabilities and contingent assets. See, workbook, I think some topics are missing over there. Amalgamation, console. I'll give you separate material for that. Okay, in 4-5 days I'll give it to you. And whenever if I'm going to do internal reconstruction or amalgamation, or I'll give you chapter wise handouts also for questions. Okay. Now, provisions, contingent liabilities and contingent asset. Now, before I proceed, the speed I'm going at, do you want me to fasten more, slow down, or it's fine? Majority only I'll go. See, it might be slow for somebody, but I'll go with majority. Okay. Online, speed okay, should I slow down, increase? Yeah, Akash, online students, those who are in Chennai can come and collect the material here. You can Dunzo it also. Others I have sent soft copy in the group, you got soft copy also. But if you want the hard copy, I think you need to check with the admin how they're going to courier it to you. You don't need to cross check with admin, not sure of that. But there is a courier facility, you can check with them. Okay. So AS 29. Before I proceed to the standard, let's look at the balance sheet. What all comes here? Fixed assets are otherwise known as PPE, our PPE. Then investments, long term or short term. Then trade receivables, inventory, cash. Actually order, if you see schedule 3, no, those who know in group 1, when you memorized, you would have had 6 items will come in current assets, inventory in the order, first it will be inventory, this is the correct order. Why? Huh? In terms of liquidity, no. First the inventory only you will create, no. Then you will sell it, become what? Trade receivables, then cash. That is the logic of having that order. That's all. So you should not forget. Exam which will come first in schedule 3, inventory, trade receivables, then every item has logic but no time for that. Now, these are items. This one, fixed assets or PPE, how will you show in the balance sheet? Historical cost. And sometimes whenever you will do revaluation. Whether I show, today if I am showing an historical cost, is it a true value? When I do revaluation, okay, revaluation, then I will charge. Depreciation is also a provision, correct? Investment is carried at lower of cost or market price, market value or carrying amount. Depends on whether it's long term, short term. AS 13 you would have seen. You will compare two elements and you will do. Inventory, sorry, investment is inventory lower of cost or trade receivables amount is cash is fixed. So majority of the items on my asset side, bulk of the amounts, these, they are two comparable elements. So sorry, even trade receivables, I can write it this way. It is fixed, but I'm reducing provision for, I'm reducing provision no 5%, 10%. Therefore the amount actually in balance sheet, will I get the same amount? Because of provision, it might be plus or minus. So except cash, nothing else you will realize what's there in balance sheet. Correct? So everywhere there is an element of judgment. For example, let's take depreciation. Some of you might know this concept. I'll repeat because no option. Okay. So online students follow. Depreciation is there. I'll give a simple example. Quickly I'll do it. Asset value is 50, life is 5 years, per year depreciation is 10. Assume, okay, SLM. P&L account, sales 100, purchase 30, gross profit. Then other expenses 20, net profit how much? 50. Assume everything is cash sales. Every item cash, everything is cash. Net profit in hand is 50, cash in hand is. Can I say net profit is 50, cash in hand is also? True or false? True or false, guys? True, because everything is cash sales, cash purchase, cash expense, everything is true. So how will this go to balance sheet? Cash in balance sheet 50, here reserves and surplus 50, reserves and surplus 50. Following up, this is year 1. Now I'm just going to change one thing. Here I'm going to write depreciation 10, our asset, this one 10. So net profit will become, correct guys online. What is the cash in hand now? Still 50 or change? Still 50, correct. So this becomes 40. Now let me do a small analysis. Year 1, year 2, year 3, year 4, year 5. Assuming numbers repeat for all the years, reserves and surplus will be first year 40, 40, 40, 40, 40, total 200. So this year balance sheet 40 and 50 cash. Cash will be why difference? So if you look at the balance sheet after 5 years, my profits available, my assumption will be, if somebody reads the financials, available profits how much? But actual cash in hand, what is the 50 for me to personal, for me how it is? What is that? Other students, those who know should not tell others. Why the difference came? Okay. So what is the whole concept of charging? This came because of depreciation. No? Depreciation is an expense. No, we studied all life. Depreciation is an expense. But even though it's an expense, it's helping me increasing my cash. So can I say depreciation is a saving? Can I say that? Can I say depreciation is saving? This difference is how much? 50. What is this 50? After 5 years, I have to replace my asset. How will I get 50 rupees to replace? This 50. So depreciation is an expense, but in a way it is charged to help me save money. But in reality, question is, after 5 years will this 50 be there? You are going to 250 will be there, but we will start spending it off. So this might even be 30 full cash. So hypothetically, if you don't touch anything and if you just spend, depreciation helps you in saving. So depreciation is a provision which is created to save money for the future. For the future. Same way, let's take a company which has employees now. 100 employees have joined now. 100 employees have joined. Now 100 employees have joined. Gratuity, you know the concept of gratuity. When they will be paid gratuity? After 5 years. My question is, today I am in year 1. Assume all the 100 employees serve for 5 years. Then what will happen? I should pay gratuity for everybody. Gratuity will be 100 employees into last drawn salary into number of years of service. Bulk amount. Where will the company have money for that to pay suddenly? They have to keep saving every year. That's why you charge what? Provision for gratuity. Reserves will decrease, but your cash balance keeps increasing. You invest and save somewhere. So provision is created today to meet a future liability. to meet a future liability. That is provision. Here in these cases, that liability is certain or not certain? It is going to be certain. Following up. But when you look at a contingent liability, it may or may not happen. Now you look at the definition. Definition for provision, it says, see, in the soft copy it is proper, but in print alone some pages it got shortened. Okay, so that you have to manage. Provisions, there is a present obligation arising from past events. Present obligation arising from past events. For example, now I am saying CSK versus KKR finals. No. So let's say day of finals morning, I get bet. I am saying CSK is going to win the match if they win 5,000 rupees for me. Otherwise, I will pay you 5,000 with somebody. Okay. Now this bet was kept up. Can I create provision in my books of accounts for this? If I have to pay, no. Why? It may or may not happen. Correct? But I am sure CSK is going to win, I know. So can I create income? Why? Okay. Last over, 1 over, some 35 to win something. Can I create now income? Why? Certain, no. Okay, 4 balls, 40 to win. No. Can I create income? Why? Unless you actually receive it. So provision, they are saying there is a present obligation arising from past events or gratuity. In the past, employees served for 5 years, so there's an obligation today. Depreciation asset was used in the past, today obligation to replace. The settlement of which is settlement of the liability. What liability? Gratuity. Is likely to result in outflow of resources embodying economic benefits. That means what? The settlement to pay this liability, there's going to be outflow of resources. How will I pay? Either in cash or I can even give assets for paying anything. Reliable estimate can be made. How much to pay I can quantify. This is a provision. So quickly write down this definition 2 times. Don't look at my face. When I ask you to write, if somebody is looking at me, they'll write 3 times. Okay. So in law class, I'll make you write more, but here only few standards. Some definitions are important, so you need to memorize them. AS4 you learned it. Same way AS22 nothing to memorize definitions. Again here. Online students, I want you to turn your camera on and show me the notebook. You're writing Akash, Vijay, everybody, Sandra, Siddharth, Kritika, Vardhaman. Other students, ensure you name yourself properly. All the three conditions should be met or any one? All the three has to be met, and this and this and this. There is a present obligation arising from past event. Write down 2 times, then we'll memorize in the class itself. Start good. Okay. So what are the definition? Let's learn in the class itself. No time after going home. Again next day morning class. So what is provisions? That is the present obligation because of a past event. The settlement of the liability would result in outflow of resources embodying economic benefits. Reliable estimate can be made. So what is this? This part I told results in outflow of resources, cash. I can give plant and machinery. What do you mean by embodying economic benefits? Cash, if I don't give him, if I keep with me, I'll keep in the bank and get interest. Plant and machinery, if I don't give him, I will produce goods and sell. If I have land and building, if I don't give him, it's an asset which I will get rental income on. So the asset, the resource, outflow of resource which I am giving him, along with resource, it's embodying what? Economic benefits which I am going out of my business, following up. So present obligation from past event, first present obligation from past event, outflow, settlement of which involve outflow of resources embodying economic benefits, reliable estimate can be made. Sullupa, without saying, tell me. Without saying. Write one more time, quickly, fast. Write it, write. Online students, Akash, unmute. Online, when I say unmute, unmute and camera on, both. Akash, where is the camera? Camera is not on. Akash, turn your camera on. Correctly this time, Vardharaman will always sleep. Okay. Akash, definition without seeing. Settlement of which would result in outflow of resources. Reliable estimate. Follow guys, those who are watching online live, we are repeating here, people here are able to say you need to repeat, you need to repeat. So one more time, there is a present obligation from past event, the settlement of which would result in outflow of resources embodying economic benefits, reliable estimate can be made. One more time together, proper chorus. First, there is from past event, outflow of which result in of resources embodying economic benefits, reliable estimate can be made. Clear? Oh? Easy guys, can I proceed? Now, they are saying in these two, there is a present obligation from past event. CSK match. Now, a settlement of which, no, forget the CSK match, that's a different example, I'll take it again. Now, court case, I am going to lose the case. My lawyer told you are going to mostly lose the case, but there is some chance you might win, depends on the judge's mood that day. Over there, if I lose, I have to pay outflow of resources, I have to pay money. But how much to pay can I know? Depends on what the judge will tell. So, A provision where there is present obligation, but one of these two are not there, it becomes what? Contingent liability. So present obligation, so same definition. Present obligation arising from past events for which either there will be no outflow of resources embodying economic benefits or reliable estimate cannot be made. This or this, both are not there, contingent liability. One also is missing, becomes what? Contingent liability. CSK match. I told if CSK wins, I will get the money. If CSK loses, I will pay the money. That bet, all that, whatever. No, that is a possible obligation. No? The match winning or losing, is it in my condition? My control, my control. That event can be favorable or unfavorable to me, not in my control. Possible obligation arising from past events, the settlement of which, so possible obligation, CSK match, if CSK lose I have to pay, arising from past events, bet already done, no. So possible obligation arising from past event, the past event is bet is completed. Sir, bet is illegal, no, how I am doing? Even if it's illegal, I can enter into transaction, not legally enforceable. Now me and Rishabh bet, I lost the money, I said I won't pay, do what you want. Can you go to police station, file a case? No, but you can enter into the agreement. So possible obligation arising from past events, the settlement of which, me paying money if CSK loses, is based on occurrence or non-occurrence of one or more future events. Final still has to be played. One or more future events, future uncertain event, not wholly within the control of the enterprise. Correct? Following. Quickly write how many times? 2 times. I'll just check this iPad thing and come. Online live also. Everybody please write 2 times. Only these 2 definitions if you remember, A student and over. Every answer. Seriously. Right case, accounting standard null, finish learning in class. That's it. Home, just quick revision. This or this is contingent liability. That's next vara. This or this. So done writing guys, online I can't see anyone's notebook. Those who finished online, automatically turn your camera on. Vijay, good. Online live, try to be in an atmosphere where you can talk loudly, where you can repeat. I know every online class will just sit silently and see, but try to repeat, it makes a difference. 1-2 days, put the effort, it will keep going. So definition guys, loudly with me. Possible obligation arising from past events, the settlement of which depends on occurrence or non-occurrence of one or more future uncertain events not wholly within the control of the enterprise. Again, one last time together. Possible obligation arising from past events, the settlement of which depends on occurrence of one or more future uncertain events not wholly within the control of the enterprise. So present obligation from past event where there is no, either there is no outflow of resources embodying economic benefits or reliable estimate cannot be made, or possible obligation from past events, the settlement depends on occurrence or non-occurrence of one or more future uncertain events not wholly within the control of the enterprise. Not wholly within the control of the enterprise means partial control. Court case, some part my effort is needed, no, my argument depends. So not wholly means even partly not with me, still it becomes what? Contingent liability. Only where it is fully in my control, it is not a contingent liability. Clear guys? This is contingent liability. Contingent asset, same case is going on. In that case what happened? I might win the case, correct? Any case, let's say infringement case, Bata case, I might win the case of Bata. Now court, I am Bata company. Award is going to come for me. Award is going to come for me. Can I recognize income, contingent, asset? Why? Asset, why can't I recognize? Concept of prudence. Why? Why concept of prudence? For example, logic behind prudence. Now, let's say I am a dealer of Apple, iPhone and all the Apple products in Chennai. Okay, let's say all the stores are in my control. Let's say launch date, let's say is 20th of October today. Okay, example, iPhone 13 launch date. Global launch date, same day or different? Same day. So India also you can go to all the stores, Express Avenue, other stores and buy. If today is the launch date, product will come to me before itself. So let me just make a small difference. Date instead of, I'll make it 10th April 21, just for relevance. Launch date, new iPhone model. 31st March is my book closing. Automatically, my stock, I will receive the stock well in advance. Let's say something around 20th of March 21, I got the stock of all the phones. I'm a dealer. So I am selling one iPhone for 1 lakh. I would have got it for, let's say, 70,000. What is the actual cost of making an iPhone? Less than 30% of the price. Very less, 20-30,000, that's it. You are paying majorly for the brand value. Okay. Now, I am a dealer, I can't get cost price, only Apple will get cost price. So I purchase for 70, I am selling for 1 lakh per phone. As on balance sheet date, I have to recognize my closing stock Apple iPhones, lower of cost or NRV, let's say market values for simplicity purpose, 1 lakh, whichever is lower, 70,000. Why can't I recognize that 1 lakh? You will say prudence, cannot anticipate future gains. I am saying for the past 10 years, when I open the stores, people will come, stock is getting over. I am sure on 10th April, everybody will come and buy for 1 lakh. This time also new model came, full queue, everybody took the phone and went. So I am sure that within 10 days, I am going to recognize 1 lakh. Why can't I recognize? Why can't I show this as my stock value? See, why you are showing lower of cost NRV? If you sell today on 31st March, what I will get? If I sell the iPhone today, I'll get more than this. I'll get more than 1 lakh pre-sale. He'll give 1 lakh 50 also and buy. There are people will buy. Correct? No. So why am I showing in cost then? Prudence. Prudence only is this. Why can't I show in 1 lakh? Logic only, no. What if stock? Stolen. So what if stock gets lost? What if stock gets destroyed? Then assume in this time gap between 31st March to 10th April, stock is destroyed, stock is lost. And what is the value I have lost? 70,000 and not 1 lakh for this. So prudence, future losses you anticipate, but gains, unless you certainly get, you cannot anticipate, because one more reason, if I anticipate the gains here, if I increase my stock value, if closing stock increases, gross profit will increase, then net profit will increase. Then what will happen? Closing stock I am showing iPhone for 1 lakh, net profit increased. I will pay dividend from this net profit. I will use the profits. Next year stock got destroyed. Where is the profit? Correct? Following, guys. So in reality, companies what they do for playing with net profit, they play with stock. So if they move 31st March, if they keep moving stock here and there, this will change. So now why all this we are discussing? Coming back, contingent asset, future receivable, unless you actually receive, virtually certain, you will not recognize. Definition you already know. What is contingent liability? Possible obligation arising from past events. The settlement of which depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the control of the enterprise. When I'm repeating, I'm screaming from morning. I don't want people to sit quietly. You also, I want you to repeat. I want you to repeat. Contingent asset, online live, I know I can't see. Be honest to yourself. Contingent asset, possible asset, same definition. There, possible obligation. No? Possible asset which may occur due to past events, of which their settlement here, realization depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the. So their possible obligation here, possible asset, their settlement here, realization. Apart from that, rest is same. Accounting, recognized as an asset only on receipt until receipt disclosed in director's report. This is first part of AS 29. There are some more concepts called restructuring costs, reimbursements in this. I will take it up when we start solving sums. So let me go do, we'll do a few sums, then come back and solve the concepts. So question number 1, clear? So let me read. Question number 1. Full question you read, go through, then we'll try to solve. So go through the question, guys, fairly easy. Understand the facts first. All you have to do is categorize as either contingent liability, provision, or contingent asset. Exam, why I made you memorize the definition. When you are writing the answer, you have to write this definition. Otherwise, you are not going to get the marks. Only few standards like that. AS 20, I won't ask you to memorize. 19, nothing is there. Only few standards. AS 4, 5, 29, 7, 9. Go through, guys, try to solve both the questions as if it's exam. Done, guys. Can we start or you want it more time? Online live follow. First I want your answer. I'm not going to give you the answer. I'll just brief the facts. You will give me the answer. The company's sales tax assessment for the year ended 21, 22 or 11, 12 has been completed on 14th February 2014 itself. With a demand, sales tax departments, that time no GST, so sales tax department told you have to pay how much? 2.76 crores. Generally in GST, income tax and all, whenever you are going to go for appeal, first you have to pay the full amount. Then only you can go for appeal. If you win the case, they will give it back to you. That's how it works, okay? GST process. So the company paid the entire due under protest without prejudice to its right of appeal. That means they paid the full amount without going against it, then they are going for appeal. Is it an expense? It's like a prepaid amount. So our entry will be, it's like an advance given to department. So loans and advance debit to cash. I'm giving cash, no, to cash or bank, 2.76 crores. This part all of you understood. I'm not accepting liability. If it's expense means I'll debit P&L account, debit to cash or bank. I'm only giving loans and advance to cash or bank. The company paid the entire due under protest and then the company files its appeal before the appellate tribunal, where the appeal covers additions made in respect of 2.10, meaning they are saying out of 2.76 we are appealing, we want to contest only for 2.10. 2.10. So only for 2.10 they are going for appeal. Then balance how much is there? 0.66 crores. What will happen? They are accepting the liability. 2.76 crores was liability. I am going for appeal only for 2.10. That means for 0.66 I am accepting the liability. I will pay. That means this becomes what? First the provision, then expense. First I will pass provision entry. Create a provision, immediately I will make settlement. How will I pass the entry? Already I passed. Already if you see, you wrote loans and advance 2.76 to cash or bank. Guys, entry I'm writing roughly, no debit, journals and all. Don't tell sir you didn't write narration. Only to explain concept. Now 0.66 I'm accepting liability here. So expense is what? Assessment expense or whatever account you call it, assessment expense or sales tax assessment expense to what? To loans and advance. 0.66 is the direct entry. Otherwise we will create a liability. First I will create liability and I will adjust with this. So I'm creating provision. So this is what? Provision now. 0.66. What is pending still? 2.10. Am I accepting to pay this? Case is still pending. So I might pay, might not pay. Possible obligation from, present obligation from past events, reliable estimate cannot be made, settlement cannot be made, or possible obligation. Which definition comes? Present means you have to pay, but amount is not certain. This is possible. Because depends on the court's decision. Possible obligation from past events. Settlement depends on occurrence or non-occurrence. What is occurrence? Winning the case. Non-occurrence, losing the case. Future uncertain event. So 2.10 will be contingent following up. So out of this sum 2.76, 2.1 is contingent liability, 0.66 is provision. Sorry? Correct. So his argument is, I already paid 2.76. Why can't I show it as a contingent asset? To show, to show as contingent asset, something receivable for me. Okay. This is loans and I gave advance. Now, if I win the case, the advance will be given back to me. Otherwise, it will be treated as an expense already paid. So, see what benefit I am getting. See, contingent asset means if I win, for example, CSK match. If CSK wins, I will get 5,000. Here, It's an expense which is already prepaid. Expense already prepaid as loans in advance. If you win that expense, you will get it back. That means what? Net of what? Zero. Nothing you paid. If you lose, it's already paid. So contingent liability. Able to follow? Sure. 100%. Next part. This simple. You should give me the answer by the time I finish reading the question. Company has entered into a wage agreement in May 2020, whatever, 2022, 2012, however you can read, whereby the labor union accepted the revision of wage from June 2021. So the wage agreement provided that the hike till May 2022 will not be paid to the employees but will be settled to them at the time of retirement. To summarize what they are saying, and the company agrees to deposit the arrears in government bonds by September 22. Timeline if you see, May 22 company has entered into what? Wage agreement whereby they want revision from June 21. In May 22 they agreed for retrospective hike. They are saying this hike will not be paid to them now, but I will pay only in your retirement. But before September 22 you have to deposit this money in government bonds as a saving, otherwise what if you don't pay? This arrears no, which I am going to know, this amount, from now onwards I will pay them. They are talking about the last 1 year additional salary. That provision or contingent liability or contingent asset of? Not an asset. Contingent liability is doubtful, you have to pay. So provision, I will create provision for this. That's all. Present obligation from past events, settlement of which would result in outflow of resources embodying economic benefits. Reliable estimate, amount can be quantified. Clear? Next, question number 2. So far AS 29, easy or difficult? Question number 2. Shashank, read it.
At the end of the financial year ending on 31st December 2011, a company finds that there are 20 lawsuits outstanding which have not been settled till the date of approval of accounts by the board of directors. The possible outcome as estimated by the board is as follows. Probability, loss and particulars. In respect of 5 cases, win probability 100%. Next 10 cases, win probability 50%. Lose low damages, probability 40%, loss 1,20,000. Loss high damages 10% and 2 lakh rupees. Remaining 5 cases, win 50%. Loss low damages, probability 30%, loss 1 lakh rupees. Loss high damages, probability 20%, amount 2 lakh 10,000.
Go through the question. You have to see what has to be done. Guys, this time is not for you to relax. Try to solve. Online live. Regular class fully. You think I will not? I'll solve there? No. There also same thing. You have to solve. So let me summarize the question. Fairly easy question. At the end of the financial year ending 31st December 2021, company finds that there are 25 cases outstanding against them. Such a huge company. 20, 20 cases outstanding against them, which have not been settled till the date of approval of accounts by board of directors. Event AS4, event from the date of financial year till, then why it's coming here? It's an event. Is it a certain event which is happening or not happening? Contingent event. Might happen, might not happen. AS4, I told you, contingent events occurring after balance sheet date, removed from there, put into the standard. Understood? So you have to read them together. So they are saying, now we are in this time space where from 31st March till date on which financial statements are approved. Date of approval of financial statement. Possible outcome is estimated by board is as follows. Out of 20 cases, they are saying 5 cases. Out of 20, first 5 cases, I am going to win 100%. Can I create contingent asset? What to do for contingent asset? Disclose in director's report. Why not? Sir, I have a doubt. No. If you see, contingent liability in balance sheet, I will give a footnote. Right below balance sheet, I will give note, contingent liability. That is also off balance sheet item. But contingent asset, no. Why can't I give a footnote? Why they are saying both report? Did you ever get the question? See, provision, P&L. Contingent liability, footnote. Asset also can be footnote this side, no asset side. Now vertical, search, vertical, how it will come? Okay, after that I can give footnote, no. Why I am giving in both report? Contingent asset alone, both report. This one over here. Psychology, attention. Like I said, profit first you will see. Then everybody will first see the P&L and balance sheet. Everybody will first see the P&L and balance sheet. But then, if I give it here, you tell me only one question. The chances of somebody seeing this is high if I give it here or give it here. Chances of somebody reading this data is high if I give it as a footnote or give it over here. All of you agreeing footnote is high? Yes. Correct. Here chances are low. I want it to be low. Because if I give it here, their hopes will increase. A company is going to get contingent asset money. But if they don't get, once you have expectation in life, and if expectation is not met, you will be disappointed in every aspect of life. So here also for investors, if I give them hope, immediately they will be disappointed, no. So keep it somewhere where they might not see board's report. Why they will not see board's report? Section 134, Companies Act board's report, you will see contents of board's report runs into 50 to 60 pages. So huge. So somewhere that I'll give in para, who's going to read? Nobody will see. That is the logic. Understood? Then if I don't disclose, you will ask, why you don't tell me if you knew contingent asset? You could have informed to me, you will ask no. Because investors, you think investors care about your past performance. They invest in your company based on how you can perform in the future. Classic example, if you take Tesla, like I said, Tesla company, why share price is flying high? Download Tesla's financials. Last 3 years loss. Only this year small profits, but their share value is so high. Why? They believe that this company is the future. He has plans to go to Mars. Like I said, underground travel. They want to start underground road travel. Then, like I said, around the earth, one belt of satellites for internet from anywhere. Not free internet. Internet from, they are going to send 12,000 satellites across the globe. Already in these 12,000 satellites, 900 are sent. They are already in space. Tesla satellites. They are going to build one artificial atmosphere around the earth with 12,000 satellites, direct internet, no more antenna. From there, all those they are planning. Then like this, so many else, Mars colony, then what else, underground road. Some are not striking me. 3, 4 other things also he recently disclosed. Hyperloop, already its existence. Hyperloop. So all of that, they are believing in the future. So same way here, investor will invest based on seeing the future. So whatever I think might happen in the future, I have to disclose somewhere in my financials, contingent asset. Now coming back to this question, okay, this question we went off somewhere, okay. So 5 cases, win, therefore win you will not recognize. All this logic is for that. Next 10 cases they are saying chance of winning is 50%. If I am going to win, will I create any amount? No. I will just mention chance of winning is 50. Next 10 cases loses 40. Again high damage is 10%. Put together, able to understand now. So probability is always chance. 30% I might win, 70% I might lose. India match 50, 50, 60, 40 like that. Okay. So this is the chance. Now this is for how many cases? 10 cases. This amount is for all the 10 cases put together or one case? All 10 put together or one case amount? All 10 put together. But ICA alone for this sum, they assume this as one case. The assumption they took. So how they took, maybe question should have been more clear. Both of us what we understood, it's for full amount. For 10 cases this is the amount. That's the inheritance we get. But there they took the assumption that this is for 10 cases. It will not repeat, already it's been said. Next time they will mention it more clearly. Loss per case. That's all. Okay. So how will I compute for the next 10 cases? Amount probability school. Weighted average you will do no. So what I will do? Here 50% into 0 plus 40% into 1,20,000 plus 10% into 2 lakhs. How much are getting? Compute guys. 50% into 0, 68 of 68,000. This is the loss for the next 10 cases. Is it the actual loss? It's only an estimate. Estimate. Is it a reliable estimate? Is this reliable estimate? Reliable estimate. Reliable means that much only I will pay. Look at what we are doing. Multiplying percentage. It's only a not reliable estimate. Next. Remaining 5 cases already in this 10 over of. Again same thing. 50 into 0. 30% into 1 lakh. 20% into 2 lakh 10,000. How much are getting? 72,000. Your answer will be, this is going to be your answer. However, since this is for 10 cases into 10, this is for 5 cases, therefore into 5. Now answer 6 lakh 80 plus 72,000 into 5, 10 lakh 40,000 is the total. This amount will be my provision, contingent asset or contingent liability. Contingent asset, no. Provision or liability? For contingent liability or provision? How many of you provision? Provision. How many of you contingent liability? It's a present obligation from past events. However, outflow of resources is there, but reliable estimate cannot be made. What our definition told for contingent liability? Present obligation from past event. Either there is no outflow of resources or reliable estimate cannot be made. But if all three are met, this plus this plus this, present obligation plus settlement plus reliable estimate, then it becomes provision. Here since reliable estimate cannot be made, 10 lakh 40 will be shown as contingent liability. Can I proceed? Question number 3. Read the question. By the time you finish, the answer should come. Read, Rishabh. Contingent asset, contingent liability, provision. Asset of XYZ Limited is in dispute with a competitor company. Dispute is regarding alleged infringement of copyright. That means they have filed a case on me. I didn't file. They filed a case on me, on XYZ Limited. I have infringed. The competitor has filed a suit in the court of law seeking damages of 200 lakhs, which I have to pay. Directors of the view that claim can be successfully resisted means what? I can defend the case. How will you deal with this in the final accounts? Contingent liability or provisions? Is this a present obligation from past events? No. Reliable estimate cannot be made. Is there outflow of resources? No. It's a possible obligation from past events. The settlement depends on occurrence or non-occurrence of one or more future uncertain events, not wholly within the control of the enterprise. Repeat. Okay. You have to write an exam. Okay. Clear, guys? Third question is done. We have only 3 more questions, but for this we need to go to the next concept. Can I proceed, guys? Hello? Standards so far easy or difficult? Guys, loudly guys, your confidence should increase for exam. AS 4 easy, AS 24, 29 so far. Oh, 22, correct. Just checking if you're awake or not. But 24 also is easy, don't worry. We will take it up next. Okay. The fabricator. Okay, we will see based on your energy levels only. Already later start பண்ணிட்டோம் இன்னைக்கு. நான் தான் சொல்லுவேன் next law class இருக்கு. Now, follow guys. Now, let's say Saranya is a building contractor, engineer. Okay, she's taken architect course. She's become a famous architect. She's building an apartment. She entered into contract with, let's say, your name, Amit. Okay, then Amit was entered. Contract was fixed for 2 crores. Amit told, I will give you 2 crores. You build the house like this. Saranya did all the computation, everything in her head, and she thought for her it's going to cost her 1.50 crores for building this. 50 lakhs is going to be my profit element, so I will take up the project. Inside the contract, there will be an exit clause, correct? If Saranya does not complete the project, leaves in the middle and goes, she has to pay compensation. So they told that is some 30 lakhs is the she won't pay. If she completes, she need not pay. But if she exits the contract in the middle, exit clause, they'll keep compensation. Even job also, if you leave, they'll say 3 years bond and all. Whenever in your life, don't take up those kind of jobs. Bond jobs are not, legally it's not enforceable. Legally they can't file a case because contract act, agreement in restraint of traders. Why? You cannot enter into those. One exception, service agreement, but generally don't go for these bonded jobs and all. 2 years will go, what will happen? What will happen, guys? Yeah, difficult. Unacademy also called me. Do you want to join? I said okay. 3 years bond. 3 years I should sign. I should stay there for 3 years. Cannot teach anywhere else outside. Restrictive clause. I said thank you. But money is fancy amount, high amount they'll pay. But teaching in the house in front of camera and all is very difficult to do it. So did not go. But money and all you will get double, 3 times, 4 times the money. You also can apply. Any fresher can apply. They are taking people like even semi-qualified students are paying 10 lakhs a year just for teaching for students. Reason they have funding, 500 crores funding, so all of that. But coming back, so they exit clause. Now Saranya started building this house. Then Amit told, silently was sitting, change like this, change the house like that, change the bedroom to kitchen. She also listened. Okay. So after she'll give the plan, Amit will finalize, she will start constructing. Again Amit will change this, contract price is fixed. Okay. Her cost also kept increasing for all these changes. It went off to 1.80 crores or let's say it went to, it kept increasing. Now she decides, she has 2 options. Either, now it's gone to 2.20 crores cost of completion. He's again telling changes, it might go to 2.5 also. So what she'll do? Better she will exit. Now we are seeing in the books of Saranya's books, for her she would have already recorded what? As per A7, 2 crores receivable, 1.5 expense, all of that. Question is, now if she's going to exit, she has 2 options. One, if she's going to exit, she has to pay 30 lakhs. If she's going to continue, she has to pay how much? Whatever she has to incur. Let's say this is going to 2.50 whatever expense, cost to complete the project. Against the benefit, what is the benefit she is going to get? Minus this original cost, 50 lakhs. So now if I write it down, the benefit in the contract is 50 lakhs. Cost of exiting is 30 lakhs. Then the other one, already 1.5 over. Now she went to 1.8, already spent another 1.8. Already spent. Now if she has to complete, she has to spend another. Say all the changes, it comes to 20 lakhs. So she has to choose to spend another 20 lakhs, complete the project. Her total cost will come to 2 crores. Gain also is 2 crores, no loss, no profit, or exit for 30 lakhs. What Saranya will do? She will complete, but she knows by the time she is completing, Amit might tell one more change. This might increase again. So she decides to exit. Already spent how much? Plus 0.30, total 2.1 against 2 crores. So extra how much she is going to spend? For this, can I create provision? Yet to be spent, yet she still yet to exit, but can she provide provision of 10 lakhs? How many of you yes? How many of you no? No. Now this is a contract where the liability is more than the asset of. So if you see ships and all, when ship is sinking, the furniture, the anchor, they will start throwing out of the ship. All the weight, if you see movie also, all the extra weight will be unloaded when the ship is sinking. Why? To slow down the process of sinking. So even though furniture, everything were assets to me, I am still throwing it out of. So at a point, asset becomes a liability. Here, this contract was an asset for her, which was giving her 50 lakhs income. But today the situation is such that it's becoming a liability. Those contracts are called onerous contracts, where the liability, it is actually a contract and asset, but the liability is more than the asset. The expense is going to be more than the asset. So this standard says for onerous contracts, when your expense is going to be more than the asset, this difference, no, create a provision, because you are going to spend. Onerous contracts, cost of fulfilling an onerous contract, unavoidable cost of fulfilling it, or compensation to exit. This one is what standard has it, but choose the lower. Ideally what Saranya will do, 20 lakhs to complete, 30 lakhs to exit. She will choose to complete. But if she chooses to exit, then I will take what? Onerous contract. So they are saying this cost of fulfilling or cost of completion, whichever is lower, whichever you choose, against the economic benefits to be recovered. If this is more than that extra, no, create a provision. Why? Basically in my P&L, 2 crores will be income. 1.5 crores will be expense. What was your original plan? 50 would have been profit. But if this keeps increasing, I have to pay, no. So therefore surplus, create a provision. Able to follow up. That's all. Next, let me finish the other concepts also, then we will take up last 3 sums. Now, let's say you have an Honda Activa which has insurance, you parked it outside. Lorry came in, crashed it, Activa into pieces. But you had insurance, you paid 10,000. Let's say 10,000, not 10,000 is too much. How much is the insurance, guys? 2,500 per year insurance to cover for up to 50,000 rupees. Lorry came and crashed. So you, let's say some damage not fully gone, some 15,000 rupees damage you have to repair here and there. So you went to the showroom, you told them, here I have insurance papers, I'll get reimbursement. Insurance company also acknowledged on call, on mail also they acknowledged, we will pay. Expense 15,000, will I get full money as insurance? Let's say I get 10,000. Question is, simple question. can I in my P&L balance sheet knock off both receivable from insurance company and payable to Honda 15,000 and showed net expense of 5,000, or show both separately? How many of you together? How many of you separately, online live? Why separately? Matching concept, no. Both are related. Why can't I show it to use for, not from usual course of business? No. In simple, the point of spending this time, point of time is a different time. Point of spending this is a different time. If they fall in two different financial years, how will you set off? Not possible. So same way Apple is there. Warranty. Now Apple's mobile, they're buying warranty. For this, when you go, you are going to claim warranty. But Apple has to spend. Apple also might take insurance against warranty cost. Do you know that? They will take insurance against warranty cost with some company, which will be compensated by some company. Can they adjust both these expense what they're spending on insurance? Both has to be shown separately. That is the next concept. Reimbursements. An enterprise with present obligation may be able to seek reimbursement of part or all of the expenditure from another party. Example, insurance contract, warranty provided by supplier. The reimbursement is treated as a separate asset, and reimbursement should be recognized only when it's virtually certain you will receive. Insurance company you went, employee that told, sir, don't worry, you will get the claim. Can I recognize? He called and told me you will get the money. Can I recognize? I got a mail confirmation. Your insurance has been processed. You will get 10,000 rupees within the next 5 to 7 working days. Can I recognize that time? Yes. Virtual certainty, company has written confirmation, so I can recognize. Clear? Virtual certainty means virtually it's going to happen. I can see that it is going to happen. It's not a he's calling and telling it's going to happen. No. I can see mail pattern. Virtually it's certain. It's a confirmation that I'm going to get the money. Just like a promise he's making. Clear? Now last concept in the standard, last one. Now this concept is borrowed from AS10. AS10. It has same restructuring cost. So let's say Nokia set up a plant in Chennai, or let's take a different example. Apple is setting up iPhone manufacturing plant in India, let's say somewhere in India. They are spending, let's say 1,000 crores to set up this plant. Factory will be small or huge? Huge factory, hundreds of acres. But government told them only for 50 years you can operate. After that you have to vacate. Example, they have to vacate after 50 years. So they established the plant for 1,000, 10,000 crores. They are going to vacate after. They have to dismantle everything. Whatever plant and machinery they kept, they have to dismantle everything and go. To dismantle this, some expense you have to incur. To close down the factory, 500,000 or crores. Crores. How many crores? Big factory, 10 to 20 crores minimum. That is a small amount to dismantle, take it somewhere else. This expense to be incurred is certain, because 50 years I have to remove. So AS10 says this amount I have to start saving from today. I have to start creating a provision. Assume I'm going to spend 20 crores after 50 years. What is the value today? Present value. I'm going to spend 20 crores after 50 years for dismantling. So today I will find a present value and I will find PV factor, annuity factor. Every year how much I invest such a way that after 50 years I get how much in hand? 20 crores. I will start creating provisions for that. This is called restructuring cost. Saravana Bhavan, let's say they have 3 areas, let's say in Chennai, Anna Nagar, T Nagar, and let's say Nungambakam, there are branches. After COVID came, many restaurants had to close down the, so they closed this branch, they closed this branch, they kept only T Nagar branch. Example, okay, let's say there are 70 employees here, 70 employees here, 70 employees here. Will all the employees continue? they will fire all the employees, but there will be some key employees of some 10 key employees here, 10 key employees here will be shifted to T Nagar branch. I will be paying them salary. Now, operations here are closed down, restructuring of the business, correct? Restructuring of the business because to scale down operations, but some employees are still retained, relocated to T Nagar, and I'm going to pay them salary. Can I consider this as restructuring cost? Paying salary for these 10 employees. Tell the answer, don't read the provision. How many of you yes? It's part of my restructuring process. How many of you know? No, because I will still keep paying them salary. If here I will give them accommodation here, others I will give them accommodation here. I close both these up. My business will come down. So I'm giving lot of offers. Saravana Bhavan, 70% offer on Swiggy, 80% offer on Zomato. This branch is the best branch, full top quality hygiene. Lot of marketing I'm doing. Why? Because I closed down these two business, I want to increase the sales here. So I'm doing some marketing cost. I'm saying I'm making a statement. I am doing this marketing cost only because I closed down these two. Can I say this restructuring cost? Look at the statement. I closed down these two. That's why I'm incurring this expense to increase sales. Can I say it's restructuring cost? Guys, you tell me what you feel. What you feel? No. Now we'll go see the provision. Restructuring cost is a program planned and controlled by the enterprise that materially changes either scope or business or manner in which business is undertaken. Example, sale, termination of line of business, closure of location of business in the country, region, change in management, any kind of restructuring of business, accounting, provision for restructuring cost. The day I decide to restructure my business, some expense I have to incur to appoint an auditor for doing the merger, accounting treatment, so many costs. They are saying whatever cost is a direct expenditure for restructuring, you can create a provision. Recognized only which meets the criteria for recognition of provision. The definition it should satisfy. It should include only direct expenditure arising from restructuring and not associated ongoing activities of the enterprise. Now you see here, cost of retaining or relocating staff will not include. Did I tell you it's not included? You yourself told me with the example. Marketing cost not included. You yourself told me, correct? Investment in new system or distribution. Say in T Nagar Saravana Bhavan, they are adding new AC, all that, not restructuring. Expected loss on sale of assets during. When you are closing, not everything you will take, some you will throw. It's not restructuring. So whatever is the direct expenditure only is what? Restructuring. Able to follow? It's easy or difficult? No. Last 3 questions in the standard. We'll take it one by one. Can I proceed? Hello? Tired? I understand from morning you're sitting. Morning what class you had? Yes. Everybody's attending. Yes. Yeah. Okay. But still yes or this. Some of them are going to sit for law also now after this. Okay. So Alpha Limited. So I'll do one thing. I will finish the standard and I'll close. Okay. Or shall I take till 5:30? Introduce next standard. See why I am taking standards. First 25 marks guaranteed out of 100 marks. First compulsory question 20 marks plus 5 marks option. So question number 4.
Alpha Limited had entered into a sale contract of rupees 7 crores with Gamma Limited during 2018-19 financial year. The profit on this transaction is rupees 1 crore. The delivery of goods to take place during the first month of 2019-20 financial year. In case of failure of Alpha Limited to deliver within the schedule, a compensation of rupees 2 crore is to be paid to Gamma Limited. Alpha Limited planned to manufacture the goods during the last month of 2018-19. As on balance sheet date, that is 31 March 2019, the goods were not manufactured and it was unlikely that Alpha Limited will be in a position to meet the contractual obligation. You are required to advise Alpha Limited on requirement of provision for contingency in the financial statements for the year ended
So go through the question. I'll also give you agenda, how we are planning next 10 days, what topics, end of the class, rough agenda. So Alpha Limited entered into a sale contract of 7 crores with Gamma Limited during the year 1819 financial year. The profit on transaction was 1 crore. Delivery of goods was take place during the first month of 1920. Next year starting. In case of failure, you have to pay compensation of 2 crores. Alpha Limited planned to manufacture the goods during the last month of 1819 financial year. So if you put timeline, 1819 ending, they plan to manufacture and deliver in the start of 1920. As on balance sheet date, this day, the goods were not manufactured and it was unlikely that Alpha Limited is in a position to meet the contractual obligation. So if they don't meet the contractual obligation, how much should they have to pay? 2 crores compensation mandatory. Profit from the contract. So this is a what contract? Onerous contract where the loss expense on the contract is crossing what? Gain. Therefore, how much provision I will create? Difference. 1 crore will be created as able to follow. Clear guys? Pay and account debit to what? Pay and account debit to compensation payable to bank for how much? 1 crore. For something beyond the profit. Able to follow up. If you see here, this is economic benefits receivable from the contract. Cost to exit the, if you don't pay, exit the contract, compensation, this higher you have to pay. Onerous contract, question number 4. Next, question number 5. Online, can I have Kritika T to read question number 5? Kritika, are you there in the class? If you don't have headphones, yes. No, அவங்க என்ன சொன்னாங்க? It's a fixed amount of 2 crores. It's not proportion. No, you have to pay fixed 2 crores. If they're given proportion, then proportionate. If they give data. If you deliver 70%, 70% of 2 crores. If you deliver 80%, 80% of what is not delivered, that percentage. Somebody is not able to type in the chat. Kritika, oh, office, okay, fine. Can I have a Sandra? Yeah, question number 5. Answer guys. So what they are saying here, XYZ Limited has not made provision for warranties in respect of certain goods. That means what? If somebody claims, I will have to pay warranty, provision for warranty, due to the fact that company can claim the warranty cost from original supplier. Is it right? Provision should be separately made for warranty. This reimbursement should be made separately. Hence, the accountant of the company says that the company is not having any liability for warranties on a particular date as the amount gets reimbursed. You are required to comment on the treatment. Is it correct treatment? Not a correct treatment. Treat them both separately. Warranty as a separate provision, reimbursement as an asset. Last question, question 6. Sashank, read. See, if when face-to-face students are reading, online live are not able to hear. Online live reading, you are not able to hear. Recording won't be able to hear. Both. So when I'm giving you time for reading, you read. You read over here. Soon we are trying to find a setup where everybody can hear it gets recorded.
With reference to AS29, how do you deal with the following in annual accounts of the company at the balance sheet dates? 1. An organization operates an offshore oil field where its licensing agreement requires it to remove the oil rig at the end of production and restore the seabed. 90% of the eventual costs relate to the removal of the oil rig and restoration of damage caused by the rig, and 10% arising through the extraction of oil. At the balance sheet date, the rig has been constructed but no oil has been extracted. Number 2. During 2018-19, ACE Limited used a guarantee of certain borrowings of Brave Limited, whose financial condition at that time is sound. During 2019-20, the financial condition of Brave Limited deteriorates, and on 31st December 2019, it goes into liquidation. Balance sheet date 31 March 2019.
Go to the question. Last question in AS 29. So to end on a good note is important, not the class, the standard. So confidence will increase. Okay, try to get the correct answer. Okay, let me give you a brief. Then I'm not going to give the answer. I'm just giving you a brief how your understanding should be when you read the question. Online, I hope you are following. Organization operates an offshore oil field where its licensing agreement requires it to remove the oil rig. So before that, let's see first how an oil rig looks. What is an oil rig? So if you've seen in these movies in the sea, Mumbai shore and all, you will see this big plant. They'll put this plant and machinery over there. It's an oil rig. What is doing? Inside the sea, this will go until the bed of the seabed, and then they will extract the oil. To construct this and place there, cost is less or high? Very high. So the cost of setting up itself will be very high. Extraction cost is nothing. Correct? So now come back to the question. An organization, which organization? ONGC, all of those, operates in offshore, this one we just saw, oil field where its licensing agreement requires it to remove the oil rig at the end of the production and restore the seabed. What they're saying, you are spoiling the nature. See how many creatures, I mean fishes and all you are. So once you leave from there and go, that you created damage no to the sea. Seabed, make it proper and go. So you need to incur some expense for that also, you should only do it. So they are saying at the end of the production and restore the seabed, 90% of the eventual cost relate to removal of the oil rig. So already we established now. So already oil rig is placed. This is capitalized. Okay. Now future there are two costs. One is 90% is to remove the oil, and 10% arise through extraction of day-to-day working capital expense when I'm extracting. As at balance sheet date, rig has been constructed, it's ready, but oil has still not been extracted, not even a single drop. Now they're asking how to account for this. First, construction costs, not the standard. AS then says capitalize. I'm only going to look at the future costs that I am going to incur. One is for removal, which is certain or not certain, and extraction. So how to account? Can I create provision for both? How many of you only 90% provision? How many of you know only 10% provision? How many of you both 90 and 10 provision? How many of you no provision, sir? Once I incur, I will create. Online, here face to face, everybody correct answer. Online, guys participate. Last question, confidence is important. So here, this 90% I have to incur of. So I'll create provision for 90%. This 10% I will create only when I start extraction. So for now, not required. Following up. Now last question, second part. Same question, second part. Let's end on a high note. Question number 2. During the year 1819, ACE Limited gives a guarantee of certain borrowings of Brew Limited. So ACE, Brew, Companies Act that found corporate law guarantee or that surety. ACE Limited gives a surety or guarantee for the borrowings of Brew Limited. During the year 1920, financial condition of Brew Limited was deteriorates, and as on 31st December it goes into liquidation. This is the balance sheet date is 31st March 19. So we have 2 years here. 1819, that time it is good, and 1920 when goes into liquidation. When it's going to liquidation? 31st December. That is which year? So that belongs to which year? 1920. Question is, should I create provision? Who should create? Should ACE Limited create provision? If Brew Limited does not pay, I should only pay. I'm giving the surety. Should I create the provision? 1819? Not required, because his financial position is good, I might not pay. But this year is gone into liquidation, definitely he might not be able to pay, so I have to end up paying. It's a possible obligation or present obligation? It's a present obligation from past events. What is the past event? Giving the surety. This involves settlement of the liability, involves outflow of resources, embodying economic benefits. Reliable estimate can be made. I know how much to pay. Outflow of resources, my cash I have to give. Therefore, I'll create what? 1920 provision will be created. With this, we are done with 3 standards: AS4, 29. Okay. I will just give you the class structure for the next 10 days. You should be transparent about this. Admin might inform you 1 day before, but I know my dates. Tomorrow 21st, 22nd, let me write all the dates. So if you are not comfortable with the timings and all, feel free to take refund if you have already paid. If you are attending demo, you can choose what to do. So I need to tell you when the syllabus will get over and all of that. These are the dates given. Firstly, by 30th we cannot finish, because accounts was 9-10 days. That itself didn't get over. Advanced accounts will need some time. But I will try to complete 80 to 90% of the syllabus in these dates. Now, 21st we are almost done today. Then tomorrow also we have class. 20th. Okay, fine. Today is 20th, so we are almost done. 24th Sunday, I'm going to keep law full day class, so you won't have advanced accounts that day. So that day Sunday will be whatever time, 10 to 7 PM or whatever time till we complete law syllabus. There are some law crash course students, I think half of you. 24th I will keep the law balance syllabus. Correct? So 24th leave for you. Clear? Is able to follow. Then 22nd, 23rd, you will have class from 10 to 5:30, usual time. From 25th onwards till 28th, I am planning to take extra 2 hours every day. Is it okay? From 10 to 7 or 7:30 based on the class flow. Is it okay for you? If you're not giving consent, I will not take. So I want everyone to be okay. Okay. These days, 25 to 28. Okay. 29 schedule as 29:30, but those days we don't have advanced accounts. Those who join group 1 accounts, Vittal sir will come and finish off. I think he has branch accounts in AS10 and some GST also, sir. Tarunraj sir will take 1 days. They will finish off by these days. Then again, from November 31st, you have October, your costing crash course starting. From costing faculty, I'm going to try and steal 1 or 2 days. So before November 15th, I'm planning to finish. I'll need these 2 days. I will somehow need it. I will get from Rahul sir for DT. I will take those days and finish it. This is the schedule. Understood? Just here and there some changes. No option for that. 24th inevitable because law students I have to finish. I need to use my days. Tomorrow is 21st. Tomorrow also I will confirm in the group by tonight. Time instead of 10 to 5, we might have 2 to 7. Only tomorrow. Morning first half, I might have to go to the hospital tomorrow alone between 10 to 12. So tomorrow post lunch session, come here after lunch. Don't come here until I want lunch break. So around 1:30 or 2 p.m. I'll announce in the group tonight. It's not fully confirmed, guys. By night I will know. Till 7:30 p.m. tomorrow, since we are starting late, because there's no point of you coming and leaving by 5:30. So let me summarize the schedule again. 21st, that is tomorrow, correct? Tomorrow will be either 1:30 or 2 p.m. till 7:30. Then 22nd, 23rd, 10 to 5:30. 25, 26, 27, 28, 10 to 7:30. All the days promise we'll start on time. Okay, not like today we had 40 minutes delay and all. 100% I'll be here on time 10. You want to start, one more thing I need to ask you, do you want to start at 10 or 10:15? Asking because you have EAS class at 10. Some students have EAS. 10 is okay for those EAS students. 10 is okay. So we'll start with 10. Okay. So agenda, in these dates, my plan is to complete everything. We will be left only with Indian Partnership Act, partnership accounts, resolution, and maybe one more big topic, maybe consolidation or something. So the plan is, why I'm leaving these two big topics, I will just need 2 more days. So maybe this November 5th or 6th, one day I'll keep full day session, 1 day for partnership, 1 day for consolidation to finish. Understood? And in this time we'll finish off amalgamation, internal reconstruction, banking, NBFC, everything will get over. Clear, guys? I want to be transparent in the first day itself. Otherwise admin will inform next day night, you will get to know, you'll get irritated. So clear communication. Now if somebody is not comfortable with these timings, feel free to take the refund. If you're not comfortable, if admin is not giving, let me know. I'll take care of all of that. Because you're registering after this only. So I want to be very clear about this. Because the schedule has 10 to 5:30, different dates. Clear? Now we have another half an hour. Can I proceed? Hello? Or tired? Can I just spend 10-15 minutes to introduce a standard? Hello? Or you want to close? I'm leaving the option with you. I'll go with majority. Online students, how many of you, sir? Please, sir, first day, leave us early at 5, close. Online, here also you can raise your hand. Close means up. I'm not going to judge anybody. It's your choice. Close, up. Online, 1, 2, 3, 4, 5, 6 for close. Continue. Continue. Online. Okay, I will do one thing. Not yours, not mine. 15 minutes, 10 minutes, I'll just introduce the topic, background. Which standard do you want to take? AS? AS? 7 is easy. 2 hours we'll finish. I'm thinking. The ones you won't study for exam, I'm thinking. 24, okay. 17 I'll introduce. 17 or 24? Okay. Guys, quickly guys, delay time podum pola. 24, okay, fine. AS 24 talks about discontinuing operation. I'll only give you background. Why this standard? Very important. Why this standard? Okay. Now, L&T is in what business? Construction contracts. Construction business, many other business. 15 years back, they had two main lines of business, which was cement business and construction. Anybody can tell me which business is that, which company purchased it? Ultratech. Before it was L&T. Ultratech before was L&T. L&T is one such company where like Reliance family controls, Tata family controls, L&T is Infosys family and core promoter group. L&T is one such company where not more than 2% is held by one shareholder. So it is a true example of a public company where control is with full public, proper directors, not one person has more than 2%, maybe now it's gone to 3, 4, 5, but there is no one person who has that full decision. It operates, a company's example L&T, okay. Now, they had two businesses, cement and construction. Their financials, P&L account will have sales XXX, revenue from operations. See, I am drawing T format for ease, but sales means revenue from operations. Schedule 3, one amount is there in the face of it. That time it was same. Will it be both put together or separate? Will this amount be both put together or separate? Put together. For example, I'll see if I can find that. No, I can't find it. Tomorrow I'll show. So I'll show you, I thought I'll show financials of Sun TV. So revenue from operations, even though Sun TV has TV revenue, IPL revenue, this item will be one amount. It will be what? One amount. Then how will I know the breakup? Notes to accounts plus you have AS 17 segment reporting. Now sales is going to be one amount, purchase all that is going to be one amount, then expense one amount, net profit one amount. Net profit is going to be one amount. Now say you want to sell something, your phone or some, you listed on OLX or some app, Quicker or whatever you listed. How soon will it get sold? Until it will take some time. Now Ishwar wants to get married. He put his profile on Bharat Matrimony. Tomorrow will he find the girl? It will take time, no. So if for that itself, for selling a mobile phone, it takes time. For a company like L&T to sell a part of their business, they will first publicly announce that we are going to see. Internally inside the company they will decide. That is one. But I have to publicly announce we are looking to sell. Who wants to buy? Now, will this happen within 1 year? Let's say they wanted to sell in 2005. Will this happen within 1 year? In 1 year will it get sold? Maybe or may not be, but it will take some time to have negotiation. Here I have an intention to sell, correct? I have an intention to sell, but I'm still looking for the buyer. So look at my P&L account. This year some sales, some purchase, some net profit, which is both the businesses together. Next year, year 2, purchase, sales and net profit, both the businesses together. In year 2, I decided to sell. Year 2, I decided to sell. Now, year 3 also, yet to find a buyer. Year 4 also, yet to find a buyer. Year 5 also, I am yet to find a buyer. Possibility is there. Now, for all these 3 years, the financials follow, guys. Company knows The minute I sell, the sales which is here, XXX, will drop by half or whatever percentage, correct? Purchase will not be XXX, net profit will not be XXX. This I know or I don't know. Today it is some amount, let's say 10 lakhs. The minute I sell, once I find a buyer, this might drop to any number, 6, 5, 4, 3, 7. So, user every year, when he looks at your financial statements to invest in your company, in year 1, these numbers are true numbers together. Year 2, you decided to sell, okay, fine. But year 3, 4 and 5, why will a user look at financial statements? To project for the future. So if you want to buy shares in L&T, what you will think? L&T's total turnover, 30% comes from cement business, 70% comes from construction business. So I will see cement industry is going to grow, so L&T is going to grow. Let me invest money. For example, after COVID came, all the IT sector companies stocks flew. Infosys and all 1500, it all flew. So I'll make future projection and invest. So this company decided to sell. Where will I disclose in the financial statements? Notes to accounts. First I will see, or in the first page itself I will see first. But still, investors will first come and see where. If I give you financial statements, first page you read is P&L, balance sheet is the first page you read. So this information that investor is going to invest money, he is not going to read the audit report, he is not going to read other reports, he will just look at your profit, sales item and invest. Somewhere else if you disclose I am going to sell my business, suddenly in year 6 I sold the business, or year 5 ending I sold the business, everything will drop. He will be in shock. He will ask why, how it happened. I will tell I already disclosed I am going to sell. He told I didn't read. So what they are saying, the minute you decide you want to sell, that means from a continuing business for L&T, it wants to discontinue cement. Why it wanted to discontinue? They were not able to give the full focus for it. The business had more potential to grow, but the management team could not focus on 2 industries at a time, so they wanted to take it off separately. Good decision. Ultratech Cement, huge company today. L&T, huge company, correct? So they are saying the minute you decide to sell, every item in the P&L account, every line item, sales, purchase, net profit, split into 2. It's not note split, it's not segment reporting. Financial statements itself, your P&L and balance sheet, revenue from operations will have 2, purchase will have 2, net profit will have 2, tax will have 2, everything will have 2, break up into revenue from operations or purchase or tax or expense from continuing operations, revenue or purchase or expense or employee cost or net profit from discontinuing operations. So that I am communicating to the user, if you want to invest in my company, give more importance to the continuing operations number, don't invest based on the discontinuing operations. So such a deviation is a huge deviation. That means I decided to sell. After 2 years nobody came. Again I am saying I won't sell. Possibility people will do. Simply I will split my P&L as continuing, discontinuing, again split. So possibility is there. I'm saying I'm going to sell. 7 years I'm going to put. After 7 years nobody came to buy. Again I'll change. So all this possibility is there. So the standard says, what activity, I have multiple products, ITC has no, cigarettes, soaps, hotels, all of this. They want to discontinue Sunfeast pasta or biscuits, they want to discontinue. Is it a discontinuing operation? ITC has multiple products. One product they want to discontinue. Maruti Suzuki has Baleno car, Swift, then what else? Desire, so many are there. Let's say tomorrow they decide to discontinue Desire. Is it a discontinuing operation? Should I show separately? Income from Desire separately, income from this separately. Getting the question now? Able to follow? ITC, they are discontinuing only biscuits, they are discontinuing. Should I show it separately? So, question, the standard tells what is a discontinuing operation. is the first question. And second, once it becomes a discontinuing operation, when you should start splitting and how you have to make that disclosure. That is all about AS 24. This is the background. So tomorrow when we start off, we will understand, we will start with what is a discontinuing operation and proceed. Background, they were not going to ask an exam, but for you should know why a standard is important. Understood? So thank you guys. See you all tomorrow, 1:30 or 2 p.m. or if not, if no hospital visit, normal 10 a.m. I'll post in the group tonight. Okay. Huh? Today law, yeah. Law students today go for a break. We have law from 6 to 8:30. I'll be taking. Here only. Thank you guys, online students, thank you. I'll take up the doubts alone tomorrow guys. Which group? Admin கேட்றீங்களா அவங்க ஆட் பண்ணுவாங்க ஷூரா. அட்மின் வினய் இருப்பார், அவரை கேட்ருங்க, he will definitely add. Sorry, WhatsApp group. Admin has that access. If they don't add, you message me. Huh? Sorry? All the classes. See, by 28th majority, but after that I need 2-3 days. Sometime in November only, whenever I get slots. That's why I want to disclose that.